applying auditing standards in practice. The resource person for this afternoon is CA Mohan or Lavi from Bengaluru. May I request our chairman, CA Ranjitar Warrior, to welcome our speaker and all the participants.
Very good afternoon to all the most respected participants, the most respected faculty for the evening, Regional Council member Mohan sir, and my managing committee colleagues. Welcoming you all to the session on standards on auditing put into practice. Probably that since yesterday that we've got a little relaxation in the restrictions that we've got on COVID-19. That many of us are probably attending the seminar and the session from offices, which is a good sight undoubtedly. But may I also urge and request each one of you all to kindly also stay safe and take vaccine or in whatever way possible to stay safe and also ensure the safety of our staff and colleagues at office as well. Ernakulam branch is also planning, as all of us know, under the guidance of Mohan sir and all the managing committee colleagues coming together, we did 600 doses of vaccines for the good interest of members and family. But we are also now thinking of planning for a joint dose of vaccination for our staff. And students, CA students. So let us see how the response and things go, and then we'll plan and discuss accordingly. Also that as I had requested and had a small appeal last day, that under the guidance of Roy sir, that we are planning for aggregation of digital devices to whatsoever extent possible for the good interest for the underprivileged children who are unfortunately not in a position or in a situation to afford mobile tablets or mobile phones or digital equipments for the good interest of their classes. So if it is in whatsoever way possible that we members can come together, we've already got around 50 requests from various government schools towards the outskirts of Ernakulam, more so towards Chellanam and Waipin areas. So it will be really good. I think it will be a noble initiative from our chartered accountant fraternity if we can come together for this good cause and do in whatsoever way possible. For the session today that we have, I'm sure Mohan or Lavi sir does not need any introduction per se for our members at Ernakulam branch. The way in which he has been so well received, so well been popular among the members of Ernakulam branch. And so it is that he also rightly acknowledges whenever he says that Ernakulam branch is as equivalent for him as Bengaluru branch, which is his hometown branch. So that is the acceptance that he is been receiving as a speaker for our members, and also the other way where he is also very affectionate. In fact, in spite of his schedule this week, I'm given to understand that he only because it was Ernakulam branch that he could afford to spare some time for our dear good members. Sir, we are deeply grateful to you, sir, for accepting for a topic of this nature, especially now that the audit season is about to begin. Though the dates have been extended, but I'm sure many of us, in spite of the income tax site that has been going through, but we are all getting geared up and prepared in the initial stages of our corporate audits and the other non-corporate audits as well. Let me wholeheartedly welcome Mohan Lavi sir to the session today.
Thank you, sir. Thank you so much. Thank you.
We are also fortunately joined with us by our very own Mohan sir. He is addressing Coimbatore branch at 3:30. He was addressing yesterday, as you might have heard, 5 branches coming together from Kerala, the small and medium sized branches together coming for a 3-day virtual seminar on accounting standards. So he did the inaugural session yesterday. Wholeheartedly welcoming Mohan sir today for the session.
Thank you. Thank you so much.
My eminent managing committee colleagues, Vice Chairman CA Jose KV, immediate past Chairman Roy Varghese sir, past Chairman Srinivasan sir, Treasurer Alan Joseph, SICASA Chairman Salim Rashid, welcoming you all to the session as well. We've got 100 plus registrations today, so we'll hope to see them as usual in 5 minutes time or so. We'll get to see the number clicking 100 very soon. So welcoming each one of you, the branch is trying the best of its efforts possible to bring you the best of the topics, best of the speakers to address our members. Requesting for all your wholehearted support in this regard for all the branch activities. With these few little words, let us all have a great evening of learning. Thanks to each one of you. Jai Hind, Jai ICAI.
Thank you, Chairman C. Ranjit Warrior. May I request our past chairman of SIRC and member Mohan K. George to address the gathering. Mohan sir. Meantime, I will introduce our speaker for this afternoon.
Why is it required, sir? No, doesn't require, sir. Why is it required?
But
Ranjit has already introduced us.
yes, that is true. But the customs want
The formality continues, sir.
formality. So Mohan R. Lavi qualified as a chartered accountant in 1989. He has over 25 years of experience in industry across a variety of industries. He has worked in senior positions in finance, in manufacturing, and software companies. Mohan also has over 6 years of experience in practice. At present, he is a partner with Messrs. KP Rao and Company, Chartered Accountants, Bengaluru, and he heads the Ind AS and GST practices of the firm. Mohan is the author of books on IFRS, Ind AS, key audit matters, and other related topics. He has spoken at various conferences in India and abroad on accounting standards, IFRS, GST, and is a faculty member with our institute for their IFRS certification course and registered valuer programs. With these words, I introduce our speaker for this afternoon, Mohan sir.
Thank you, Joseph. Thank you so much. I think Joman
sir,
some issues and problems.
yeah, I think,
He's come.
yes. Yes, Joman sir, for your
Audible?
special address. Over to you.
Not in such a very big or and a columnist. I'm regularly communicate in Malayalam after reading this. I'm
Not
There
very
is some
clear.
problem, Joman sir.
not clear.
Your audio is breaking.
Okay, take off. I might some point.
Okay.
No,
Okay.
let me rejoin.
Okay, sir. Okay. Yeah, Mohan sir, Joman sir is having some problem. The
Okay.
audio. He may join
Alright.
later. Yes.
Yeah, sure, sir. Thank you. So can you all see the PowerPoint?
Yes, sir. Yes.
Okay, thank you so much. So, yeah, thank you, Joe, sir. Thank you, Ranjit. Thank you to everybody in Ernakulam and in Kerala for inviting me for this program. As Joman sir has already probably mentioned to you that I know a little bit of Malayalam, so I should say Ellarku Namaskaram. So I should start with that. That much only I know about Malayalam. I don't know too much of Malayalam. I can't give the presentation in Malayalam, but yeah, so I should thank all of you all for inviting me to talk on this rather important topic of applying auditing standards in practice. Of course, the subtext of this, or if you want, the title for this program was probably decided by me and Ranjit together, because we just said auditing standards means, it would be like people would think that they already know about the auditing standards because everybody's signing audit reports saying that we followed all the auditing standards. But the reason why we said that is applying auditing standards in practice is because one, of course, the audit season is starting. And secondly, if you look at the auditing standards, not everything is applicable only for audits. There's a general impression that we should use this only for statutory audits. In fact, some of the auditing standards can also be used for general purpose certifications also. We can use it for general purpose certification also. That is why this we thought we will put it in auditing standards in practice. And another reason why I thought of this title and thought it would probably be important for members to understand this is because this is a larger issue, and it's becoming very important today for members to sort of document and prove their work. I'm going to put this in a very general way. When I'm saying prove their work, I'm not saying to any outsider, but to prove to themselves first, right? And the only way we can do this is by having some standards in place. By having some standards in place. So that is why these were the reasons why we thought that we will use this as applying auditing standards in practice. As we all know, there is a legal mandate in the Companies Act 2013 for the auditing standards. They say that every auditor shall comply with the auditing standards, and they have also given a clause in 143.10 saying that the ICAI in consultation with the NFRA would recommend auditing standards for the central government to adopt. But in case that takes a little bit of time, whatever standards have been issued by the ICAI will have to be followed. I honestly don't see NAFRA and ICAI coming and trying to reinvite or redo all the auditing standards. So I would probably believe that one fine day, like what happened in NACAS, NAFRA would probably meet one day and say that, okay, whatever 46 auditing standards have been issued by the ICAI, they will be legal from NAFRA point of view also. I think that is what is going to happen in due course of time, because honestly speaking, the variety of auditing standards, the depth, the content is quite exhaustive. And so we don't see the need for any special auditing standards to come in unless NAFRA can think of any new area of auditing standards, so to speak, any new area where they want auditing standards. Then we will have to see how they probably do it. So this has now got a legal sanction as per the Companies Act 2013. So there's no avoiding the auditing standards. If you look at the set of auditing standards in India, and I have just broken this up into principal areas like quality control, general principles and responsibilities, risk assessment, and audit evidence. What do we do to use the work of others, audit conclusions and reportings? They could be specialized areas. There can be standards on review engagements. So as I have just said, the depth of the auditing standards and the areas they cover are extremely diverse in nature, extremely comprehensive also in nature, and for any particular area of audit, which one can think of, you will find that there is an applicable audit standard. Now, I also want to sort of get rid of a general misnomer or sort of a opinion which is not inappropriate, saying that it is only audit documentation which is very, very important. So audit documentation is definitely important. There is absolutely no two thoughts about that. But audit documentation is only the end result of probably all the remaining auditing standards. So, and as we'll see in a few cases today, each of these auditing standards have got separate, what you can say, requirements for documentation over and above SA 230 on audit documentation. You will find that these individual auditing standards have individual requirements on documentation over and above what has been prescribed by SA 230. So SA 230 is only going to be like the platform for documentation. We will have to look at individual auditing standards and see what they do for or what they prescribe in terms of what documentation has to be maintained for that particular standard. I have just put a list of these standards so that we understand what we are talking about today. Obviously, we are not going to cover all these standards today, but we will see how we will at least apply the important standards. You all can see here that the general principles and responsibilities starts off with the overall objective of the audit. What is the terms of the engagement? It also has this clause on documentation. The standard on auditing has got the standard has the SA on audit documentation. And what is SA 299 joint audit of financial statements? Again, individual responsibilities of those joint auditors. How do they take on those responsibilities? That is mentioned in SA 299. But I would also like to insist upon the members to also have a look at this 300 to 499 series, which talks about risk assessment and the response to assessed risks. And if you commence from 300 and go up to 450, you will find that they talk about assessing the risks. They talk about how do you respond to those particular risks and all these things. In my opinion, in the present situation we are in today, considering what is happening and what's probably happened and what may probably going to happen in the future also, this 300 series up to 499 risk assessment becomes extremely critical for the auditors to definitely will have to follow in the statutory audit. We will look about the other areas subsequently, right? The accounting standards will basically have to be followed by the company. But if you look at the general trend of what people have been saying and what regulators have been saying, the general trend appears to be that there are significant areas of concern because of the impact of COVID pandemic and all these things. And the concern areas are principally on, items like inventory valuation, impairment of property, plant and equipment, fair valuation, concept of going concern to be tested. So these are very popular areas where everybody feels that the pandemic will definitely have an impact. In the present situation, therefore, we will have to probably relook at what we are doing for those risk assessment, irrespective of what is the nature of the entity we are auditing. As we are probably, many of you will probably agree with me, this pandemic has impacted everybody. It is not only a certain sector like transport, tourism, airline and all. Everybody to a certain extent has been impacted by the pandemic. It only depends upon how they have coped with this, their response to this pandemic. So these set of auditing standards would become very, very important. I also would like to tell the members that you may probably ask me a question saying that why should I look at all these auditing standards? What is the end result of these auditing standards? Say, for example, I do understand that, let us say there is a hotel in Kerala which is probably shut down because of the pandemic. They're not able to open. So obviously the concept of going concern is going to be tested there, and we do not know what are the plans and all those things, right? So the moment you say that the going concern is, which has got a separate auditing standard, the moment you say that the revised SA is 570 on going concern, I apply it, I find it is not a going concern, it will have to find a link with SA 700, it will have to find a place in my audit report, in the audit report. So if you're going to ask me a question, what is the end result of all these auditing standards? What do I do? You will find that either it will be concluded satisfactorily, saying that we are satisfied with this particular auditing standard having been followed, or if not, you will find that it finds a place in the audit report in some point. It could be other matter, it could be key audit matters, it could be emphasis of matter. It could also be a qualification like a going concern. It could also be a normal qualification also. So we should get that absolutely clear. Either our audit documentation will say that this auditing standard has been completely complied with, we have absolutely no problem. Or we will say that it will find a place in our audit report. Your audit documentation file would also make a mention about this in your audit report. All of us, in whatever audit we are doing, we've got a certain level of expertise in this audit evidence. We've got a certain level of expertise in audit evidence because we gather audit evidence day in and day out. This is a series of standards on audit evidence which talks about items like external confirmations, analytical procedures, what to do for sampling, which is given in SA 430, related party transactions. Normally, we think of related party transactions only in terms of disclosure as per the accounting standards, as per Companies Act, or as per SEBI norms. But there is also an auditing standard to be followed for the related party transactions, which pretty much talks about the disclosure requirement only, but yet we need to know that there is an auditing standard. And we are giving a certification that we have followed all the auditing standards. The revised SA 570, I just spoke to you all about it, becomes very, very important today in the present day and age because the concept of going concern is going to be tested in many enterprises. And see, this written representation is something which all of us very popularly call as the MRL. It is called as the management representation letter. And we tend to take it once the audit has been completed and once it is over. We tend to go to the entity and say, okay, you give us this MRL, give us this MRL, and they do give it It's more like a confirmation or a representation from the management on various areas of the audit. The interesting thing is that this MRL, which is given by the management, is not going to be very, very helpful if we have not followed the auditing standards. I will repeat, this MRL is not going to be very helpful if we have not followed the auditing standards. Because the management may say so many things, but ultimately this is only a documentation requirement as per SA 580 saying that you take these representations to the management. It does not preclude the fact that you will have to follow all the remaining 45 auditing standards if they are applicable to the entity. It is a very comforting document to keep on our records, but it may not help us in case we are not, following or not followed the remaining auditing standards. I will just, whenever you all get the time, and I'm sure that now that the lockdown is also being lifted, you all will probably be coming back to your office and all, as chairman was saying. Whenever you'll get the time, you'll go to YouTube and just check this video of Thomas Cook auditor. You can probably do a Thomas Cook auditor or whatever it may be. See, Thomas Cook, as all of you all know, it applied for bankruptcy last year. All of a sudden, over a period of 6 months, it applied for bankruptcy. And there was a lot of fraud which happened there and all those things, diversion of funds and all those things. So this YouTube video, Thomas Cook auditor, is a exchange between the legislators of UK and the auditor of Thomas Cook, in which the auditor has specifically taken a written representation that it is possible that there can be a fraud. It's a very disturbing video to see, because the legislator is asking, as an auditor, how can you take a representation that there could be a possible fraud? Is it not your job to at least, obviously not checking a fraud is not his responsibility, but why would you want to specifically take a declaration saying that this possibility of fraud is there? But of course, the auditor gave some response, but of course, they were fined with a lot of fine and they were let off. But the fact remains that very, very important to understand that representation is only like a comfort letter. If we are not following the auditing standards, we will not be in a position to defend ourselves, which is going to be the end purpose of most of these auditing standards at the end of the day, right? Now, if you look at the other standards, using the work of others, right? Even if you look at using the work of others, you will find that it is possible that we may not know many things in the audit. We may require the work of a valuer, for example. We may require the work of a registered valuer to do some valuation requirement. So how do we do his work? That is something which is very important. Internal audits are obviously going to be there in a lot of entities. So what is the internal auditor saying on those particular areas? What is his take on those areas? What is our opinion on his take? All these things will probably have to be a part of this thing here. And probably I would like to also re-emphasize on this SA 620 to all of you all, saying that using the work of an auditor's expert, I think this is one auditing standard which is extremely critical for us to understand, because we can use the work of another auditor, which means he could be a branch auditor, he could be the auditor of the subsidiary company, joint venture, associate, all those things. But in the entity which we are auditing, in case it is required, we may have to fall upon experts like, say, for example, a valuer or even an analyst for the purpose of getting some information, a legal expert for getting opinions, a tax expert for getting a tax opinion. I will not say GST expert, because I do not believe this word called GST expert is there, but you may want to get a opinion from somebody who knows GST to understand whether those aspects are there or not. It is not possible for us to think of all those aspects, especially in large companies wherein the audit time is becoming compressed nowadays. We've got to accept the fact that since now, okay, because let us take this year as an outlier year, because we've got an extension thanks to COVID and all those things, but we are seeing a trend wherein companies want to report the results faster, not listed companies, even non-listed companies. They want to present the reports faster. They want to present the results faster. They want to close the audit. Audit times are getting compressed. Documentation requirements and compliance with auditing standards is becoming more. How does this auditor balance these things? That is why it becomes important to think of if required, using the word of auditor's expert also. As far as the 700 series is concerned, I think this also is an area, as I've said earlier also, whatever we are speaking in auditing standards, in the remaining auditing standards, ultimately will come and hit your audit report. It could hit 700 is the entire audit report. It can be broken down to 701, talking about the key audit matters, or we can probably look at 706 to talk about emphasis of matter, and there can also be another matter which will be probably coming in the audit report. So the end result of all those auditing standards, as I have said, will either be a part of the audit file or it will have to find its way into the audit report. And there are enough and more paragraphs in the audit report wherein we can express our views without fear or favor. We don't have to necessarily think of a qualification for the purpose of expressing our opinion. It is possible that we can express our opinion in various other matters given the audit report in case we do want to express our opinion. So again, the audit conclusions and reporting, the 700 series, becomes an important set of documents to see how those various auditing standards are coming together and are being reported in the final audit report, or at least it should be a part of your audit file saying that these things have probably been noticed, have not been noticed. So I think that is also an area where we have to be very, very clear on what exactly is going to be reported where, right? And then of course we've got specialized areas and we've got standards on review engagements. We have got engagements of other historical information and we've got some clarifications issued. Compilation agreements, we can probably look at historical data, just compiling reports and all those things. For each of these areas, we have got auditing. So if I take a quick relook at this set of standards, I will restate what I have stated earlier. I will sort of repeat what I said earlier also. These set of standards are very, very comprehensive in nature. You don't need any standards more than these 46 standards. We are more than good in terms of, more than sufficient in terms of coverage of areas, depth of coverage, and also looking at how it finds our way into the audit report. We should understand that the end purpose of an audit is to express an opinion, on the financial statements. And we are talking about reasonable assurance. We are talking about reasonable assurance that the financial statements are free from material misstatement. We are not, sort of confirming true and fair. We are not confirming anything of that sort. We are just saying reasonable assurance that the financial statements are free from material misstatement. In our audit report, also we are saying that there is no guarantee that just compliance to auditing standards will ensure that it is free from material misstatement. That also is being made as a more like an insurance clause, but still it's also there as a clause there. So if you had looked at these set of standards there, their completeness, their coverageness, we should also agree that not everything will be applicable to one particular entity or auditing. It may not be applicable because you may not have, say, for example, internal audit requirement. It might not be mandated. There may not be a joint audit. But it is very important to ensure that we have this checklist to ensure that these standards are followed. The end result is going to be either, as I have said, in my audit file, and I'm not talking only about documentation file, I will have one audit file for the entity. This audit file should sort of have a sort of a place wherein all these auditing standards, their followance or how they have been followed in the particular audit which is applicable, are recorded in a separate statement, and the fact that they have been completely followed with should be confirmed. In case they have not been followed, we should say how we have treated the fact that it has not been followed. As I said, it could be a way in the audit report by way of a CAM, other matter, emphasis of matter, all those things. So this is what we are saying in our opinion. Reasonable assurance, but is not a guarantee that an audit conducted according to the SAs will detect a material misstatement when it exists. So we are mentioning this very, very clearly. See, I think this discussion whether an auditor should detect a fraud or not, I think this is passé now, because in most of these cases we spoke about, Thomas Cook and all these cases, I think they've all been able to say that our job is not to get and not to detect a fraud. So I don't think that discussion requires, any further discussion apart from saying that it is not the job of the auditor to detect a fraud. However, having said that, I will put in a small condition here. If anybody can make out that there is a possible situation wherein, I will not say fraud is happening, but which requires a further analysis, definitely these auditing standards should be able to pinpoint that area, or at least highlight that area to the management. They can direct it to the management. Ultimately, whether the management is involved, not involved, all those things are subsequent. That is the forensic part of it. You look at audit sampling, you look at audit materiality, you look at the concept of analytical review. You look at all these concepts. If an auditor does this and he asks a few further questions, I am quite sure that he has got enough and more evidence, or he has got enough and more matter to think that he is not going to say there's going to be a fraud. All he is going to say is that this is an area wherein we do not have a reasonable assurance. It requires further highlighting, it requires further inquiry, it requires further analysis. It is possible that in the next financial year or the next year, he may either be able to confirm the assurance, or he may have to report negatively on that. So this is why we are talking about this thing here. Now, one of the things which, as I just mentioned to you all, that this is a session which we thought we will. Oh my, sorry, sorry. We spoke about applying auditing standards in practice. What I'm going to do is that when I'm looking at the individual auditing standards, I thought what we would do is take one hypothetical example, though it is not going to be a real example. And we thought that the best way to do this would take assuming that you are the statutory auditor of Fertilizer and Chemicals Travancore. I have just chosen this on a random basis, so there is no need for you to think that you are actually auditors. I know that Babu sir was the auditor. I'm not sure he's the auditor this year, but anyway, we will take this as an example. The setting is like this: 31st March 2021, you are the auditors. Audit to be completed by 31st of July 2021. This is just for the setting the stage for the audit. And now we will have to apply in this audit all these auditing standards, or those which are applicable to FACT. Right. We will first have to look at SQC1. We cannot avoid SQC1. Now, SQC1, which talks about the quality control in generally, it's not only for audit, but also for other reviews also. It keeps on saying that the firm should establish policies and procedures. The firm should establish policies and procedures. So, assuming that we are doing the audit of Fertilizer and Chemicals Travancore for the first time, and we are looking at these auditing standards, the first standard which hits me is SQC1, quality control. And if we are able to implement SQC1, we're also going to implement SAC 220, which also talks about quality control. SAC 220, as you can see here, also talks about quality control, because both these standards repeat the same words, almost to say, repeat the same paragraphs also for all practical purposes. They talk about quality and all these things. Very important aspect of this is that you will see both in SAT 220 and in SQC1, they keep on using the word saying that the firm should establish policies and procedures. So even before you begin your audit of Travancore, Fertilizer and Chemicals Travancore, you all should see whether the firm has got policies and procedures. Now, a very popular response can possibly be, or doesn't matter, we will still be able to establish policies and procedures before we commence the audit. Do remember that you have got a timeline of 31st of July to complete the audit, but what are these policies and procedures about, right? So you look at the audit report, we are still saying that we have completed the relevant applicable requirements on quality control and other issue on SQC1. A statement is being given by us saying that we are complying with the relevant quality control procedures or the SQC1 on quality control. The firm should establish a design of quality control and is comply with professional standards and regulatory and legal requirements, and that reports issued by the firm or engagement partner are appropriate in the circumstances. This is the entire purpose behind both SA 220 as well as SQC1. I will use both interchangeably because, as I said just now, both are the same in terms of what are they trying to convey here. If you look at this mandate given here and you are doing the audit of FACT for the first time, you all should ensure that standards are regulatory legal requirements. Standard means auditing standards. And that reports issued by the firm or engagement partner are appropriate in the circumstances. So how do you apply this? First of all, we will come to the reporting portion much later on. We still have got to ensure that our firm has got the quality control practices which are required for the purposes of doing this audit of FACT. The areas they talk about in SQC1 and again repeated in SA 220 are leadership responsibilities for quality within the firm, ethical requirements, acceptance and continuance of client relationships, human resources, engagement performance, monitoring. It may sound to all of you all that why we are talking about HR policies and all those things in an auditing standard. And CA firm, we have got small CA firm, we have got 3 partners, 8 article clerks, 5 of the article clerks are on leave. How we can have, human resources policies for all of those people? That is completely acceptable as an argument because this has been following the international norm for quality control. I do not know whether they're doing it internationally also, but at least that it is there in the auditing standard. But what is very important takeaway from here is that probably just to focus on the item number 1, 2 and the last item here. Leadership responsibilities for quality within the firm. Does the senior partner of the firm or does the partner of the firm actually talk about SQC1 and SA 220? Is there a procedure for establishing quality? And please remember that when I'm talking about quality, though I gave the example of FACT for this case there, it will obviously require a larger number of people to see that the quality is there. It is applicable even to a very normal SQC1 can also apply for a normal GST certification. It could apply even for that. The purpose behind this quality is also talking about ethical requirements. Now, we can think of ethical requirements in many manners, in many ways. Let us say that only for the purpose of hypothetically speaking, theoretically speaking, there is a professional misconduct case which is pending against me. I'm not going to talk, it's not pending against me, but I'm just giving an example, right? And I have got a request from a client to become his auditor. Ethically speaking, if you ask me, it is necessary that I should inform him. See, the case may be frivolous. This case may be frivolous. The case may be probably dismissed after some time. I may win the case. All those are matters which are beside the point here. The ethical requirements should probably say that I go and tell the client that this is what has happened. This is the case which is pending. The fear is going to be that the client is not going to give me the assignment. This is how it has to be. This balance somehow has to be maintained here. So the code of ethics, revised code of ethics, I'm sure the Ernakulam branch has done a lot of programs in the code of ethics. You all should ensure that those code of ethics are also maintained. Have you taken the acceptance of the previous auditor? All these matters in the code of ethics will have to definitely be done here, even for a small assignment. Even for a small assignment, ethical requirements would have to be met then. So as long as, they use this word called as tone at the top. Tone at the top means what is the senior person saying? Is it trickling down all the way down? Have we followed all the ethical requirements? Have we disclosed all the ethical requirements? Don't worry about all the human resources and all, but engagement, performance and monitoring is also very, very important. Now, especially in the present day and age wherein everything at least appears to be happening electronically, we are getting documents electronically. We don't know how good those documents are, how valid they are. it is very, very important that you all keep on engaging with the article clerks or whoever is doing the audit there. Keep on monitoring them, and you may not want to accept all the documents given by a client. You may want to ask for physical documents by courier also, but all these things. But still, that is how your firm should establish those policies. You may require a separate set of policies only for the present times, because it is not like the old times, obviously. As far as the documentation is concerned, they say that no shorter than 7 years from the date of the auditor's report. All these quality control documents should be maintained for no less than 7 years from the date of the auditor's report, just like your SC 230, right? Now, this concept of monitoring, which we spoke about, so let me be very honest here. Let me be honest here and tell you all a few things which may, they're actually practical things. We can't, all of you in some point of time or the other may have probably been subject to a peer review. And the peer review has obviously come and given you suggestions and saying that, okay, you should do this, you should do this, and all these things, right? So the first statement I'm going to make is that there is no audit file or there is no audit which will be perfect, in the sense that I'm not talking about the conclusions. I'm talking about the documentation, the file itself. This is especially applicable in the small and medium practice, because we know our clients very, very well, and vice versa. They also know us very, very well. If I require a document tomorrow, he is not going to say no, because his tally backup is with me only. He will definitely give it to me. I can always fill in the documentation later on. Why wait for the 6 months or 60 days as per the SA 230 requirement? But the problem there is going to be, as we are seeing in many cases, what has happened here is that we tend to lose track. We tend to lose track because we may not want to ask the client for the document, because we don't know what exactly we want to ask him also. That is why this monitoring becomes very, very important. During the course of the audit of FACT, please ask for documentation, monitor what is being done, ask for the documentation. As I said, for a small and medium enterprise, you don't have to think of this as some, ISO 9000 for small and medium firms. It's not that way at all. But definitely there should be a certain sensitivity to maintain a minimum sort of quality. You should definitely ensure that you are ethically following the code of ethics given by the ICAI, and you are monitoring the engagement. Many a time we normally step in at the last minute, and once the audit is completed, we do a small review, and then we ask a few questions. Then it goes back to the client. We get sort of responses. This typically happens towards the end of the audit. So if you typically follow the requirements of SQC1, you may want to do an intervention during the course of the audit itself. During the course of the audit, just do an intervention and ask them what is happening and see how it is going. That is why you should find out the deficiencies. The monitoring will help you to find out the deficiencies. What are the deficiencies noted, and how do you recommend the remedial action for those deficiencies? I'll take you all back to this audit, and I'm going to ask you all a few. We are going to answer a few questions here on this now. And this fact audit is talking about agreeing to the terms of an audit engagement, audit quality, audit documentation, all three. Audit quality, I've already spent some time on SQC1, so I won't talk about it. Agreeing to the terms of an audit engagement talks about your appointment letter. What does it say? Are you only the statutory auditor? Do you get a separate assignment for tax audit, or is it a part of this letter itself? Many of these things will have to be agreed upon. I mean, this I'm talking about, we know that this is going to be a government audit, so it doesn't matter. It will probably come from the C&AG itself or the company. But generally speaking also, let us be very clear what are the terms of an audit engagement. If I am the statutory auditor and not the tax auditor, let me do only statutory audit and not the tax audit. Similarly for the tax audit also. Why is this important? Is because we have seen in the case of ILFS reports that the terms of the audit engagement were breached. So I don't want to take you all as far as the case of ILFS, because that was obviously going to be a one-off episode. But at the same time, even between our clients and ourselves, always better to have this agreement saying what exactly is the terms of this audit engagement, What am I supposed to do? How much I'm going to be paid for it? Of course, the payment can also come in a separate document, but the terms are very, very important. 220 we have already spoken about, and we will spend a little bit of time on 230 because, see, there is a general impression that, as I have said earlier, which is probably incorrect. As long as I have got audit documentation, I am extremely safe in the audit. This is a general impression we have got, and as long as we are following, let us say, what is this? The ICAI's auditing standards on SA 230, we are safe. Very popular impression here. I'm not saying it is wrong, but we will have to see why. We'll also have to do this thing here. So before we get to documentation, we look at this fact audit, planning and audit of the financial statements, identifying the risk of material misstatement, auditor's responsible assessed risk SA 330, and what is the materiality and planning performing the audit. These are 4 of the 300 series of auditing standards. Planning and audit. Again, many members are going to tell me, sir, what are you saying planning and audit, sir? This is a small client. I have to do it by July 31st. I know it. I will have to, whatever I plan, I only have to do the audit. Because, many people have come back and told us also about this, talking about the fact that some of these requirements or auditing standards are extremely detailed. We cannot apply it in practice for a small and medium enterprise. That argument is, as I said, perfectly acceptable. But I am going to put a placeholder here for all of you and tell you all that for the purpose of this audit of FACT, which I'm talking about, this audit of FACT, 31st March 2021, audit to be done by 31st of July, right? And we are talking about planning of an audit of the financial statements. For the purpose of this audit alone, the request I probably think of in your mind is, don't worry about the Companies Act. Don't worry about SEBI. Don't worry about ICAI. Don't worry about any regulator. Don't worry about NFRAs. Don't worry about NAFRAs. At the end of the audit of this fact Travancore, you will have to satisfy yourself that the audit was done in accordance with all the applicable auditing standards and everything was followed, and you are very, very happy with the way the audit has been done. To achieve that degree of comfort, or you will not be able to achieve the degree of comfort if you don't plan for this audit. We are not talking only about a checklist for the audit. The planning for the audit would also inquire who is the staff required. Is there any audit manager required? Is there a need to change the signing partner because he wants to retire by rotation and he wants to, a new partner wants to take over? What are the areas to be covered by the audit? What is the audit plan? Physical verification do you plan? See, if you do not plan for these things in by way of a document or write it down, there is a very good possibility of it being missed. There's a very good possibility of it being missed. We all love checklists. We all like to have checklists and we like to follow checklists. And we give the checklist to the article clerks and tell them, okay, go and do your audit on the basis of this checklist. We have a checklist for Companies Act. We have one for the audit report. We have one for CARO. We have one for different aspects of the. We have one for Ind AS. We have one for accounting standards. Our checklists are pretty detailed, comprehensive, and our checklists also ensure that those areas are covered. My observation and my request to all of you would probably also be that the first thing we should probably think of is, okay, for the client, you can have the same checklist of last year. But please ensure that for each client, the checklist is different. For each client, the checklist is different because areas to be covered will probably be different for different clients. Point number 1. Point number 2 is going to be that ensure that your checklist is updated as at least once in a year. When I'm talking about updation of the checklist, I'm not talking about the fact that you should rewrite the entire checklist. Just update it. Again, client specific updation is required. again the question of time comes in. This is why it is required in planning the audit. So in the case of the fact Travancore audit, you are going to think of this. The moment you have got the appointment letter, within 3 or 4 days, you are going to think about this and say that, okay, how much of the staff are required, right? Suppose we say we require 4 people. Can you identify those staff right away and ensure that they don't go on examination leave or they don't, they just leave in midway, right? Who is the manager? The requirement to sign the changing partner, the change signing partner, has come in because I'm just talking about this in a very general way. Many firms are now doing this, and they are taking actually a cue from the RBI norms on the NBFC companies and saying that if the signing partner has signed a balance sheet for the last 3 years, let him rotate to some other partner. Okay, obviously there's going to be some other partners in the firm who can sign this, but let some other partner sign. Many people feel that this is something which is a requirement or which just proves a point about independence. So in case your partner has been signing, 3 years are over, maybe a fresh set of eyes will always help. A fresh set of eyes will always help in any audit. Just as they say in football, right? A fresh set of legs will help you when the team is losing. Audit, a fresh set of eyes will always help you. Do you want to go and ask the company, look, I want to sign a changing partner, the signing partner, I want to change. My partner will sign the financial statement because let him look at the financial statements afresh. As far as the checklist is concerned, I have also mentioned this in many other forums, but as I said, why I'm talking about client-specific checklist. I'll give you an example. Fixed assets, CARO, fixed assets, CARO checklist, right? What is the CARO checklist from fixed assets go? The first question you're going to ask is, does the company have a fixed asset register? So they will show you some Excel sheet and say, okay, this is my fixed asset register. So yes. Was a physical verification of fixed assets conducted during the year? They will show you a physical verification report, very minimal losses. So you'll say, okay, tick, no problem. The third question should have been, was there impairment of any assets? Or has the management tested any of these assets for impairment? Because this question is not asked, it is never answered. Because it is never answered, we may probably not even report about it. You may probably say, oh, it will be covered in my Ind AS 36 impairment of assets. Possible, I'm not saying no. That is from the point of view of accounting standards. But from the point of view of CARO, you may want to do this and ask this question again, because if there is no impairment conducted, we may not be able to, even report the fact that no impairment has been done. So that is why I'm saying that it is very important that the checklist has to be updated every single year. Of course, in the present times, I should also tell you all this, that we had a very strange experience, which I probably which I should probably tell you, not a strange experience, but a very interesting experience. So one of my friends was the auditor or statutory auditor of one of the subsidiary companies of a very large company. And the large companies are obviously audited by the Big Four. He was the statutory auditor based in Bangalore for the branch of the subsidiary company. And you know how it is when all these big companies, normally what happens, they say that, big audit firms, they say you have to fill up some documentation, you have to answer a questionnaire and all those things. So the this big auditing firm has been asking the subsidiary companies, all the subsidiary companies, they gave out a questionnaire. And the questionnaire, one of the questions which they asked was, what do you feel was the impact of COVID on the financial statements? Now, obviously the auditor said that, look, I have to ask the management because I am not qualified to talk about how COVID has impacted the financial statements. So he thought of responding in that, saying that according to the management, the impact of COVID has not been much or has been on these specific areas. It's also a requirement for SEBI reporting. You have to specifically state how COVID has impacted your business for the SEBI purposes. But when he asked the management gave this very general sort of reply saying that, oh, you know what, we don't know what is the impact of COVID, we're still assessing it. It may be there, may not be there. But right now it's too early to comment. So we'll wait for some time and then we'll tell you about it. If there's any impact, we'll put it in the books of account. So he wanted to respond saying that according to the management, there is no impact of COVID. And but then he asked this question and he said that the question has been asked to me. And I have asked the same question to the management. So my responsibility as an auditor, his responsibility in subsidiary company as an auditor, he felt that in his own capacity or in his individual capacity, he should have probably asked the question prior to the other person coming and asking this question. It was obviously not covered in his particular questionnaire. So that's why I said that it is very important that your questionnaire has to be updated client specific, entity specific. It has to be entity specific. So in the case of this factor Travancore audit, you're going to say, okay, 4 staff required, maybe 1 manager. We are going to cover these areas. Audit plan will have a checklist. You may want to do a physical verification of assets also because it is time to do the physical verification of the asset. Maybe it has not been done in the last 2-3 years. Or it is also possible that the management is saying that, look, we are going to do a physical verification this year. Do you guys want to join in for the physical verification? You can probably go in for the physical verification also. So those areas would require the planning. Now, when you're looking at this planning as per the requirement of 300 and also identifying the risk also, you are also going to think about the end date here. The end date, as you have seen, that which I'm not going to repeat here, is 31st of July. 31st of July, and you all ensured that 4 staff are required only to ensure by 31st of July. I'm sure ensure that it is ending by 31st of July. So this is the audit plan. You document it, and you inform it to those charged with governance also, and you tell your team members also that this is audit plan. This is a checklist. The areas have to be covered, and this is the final schedule for the audit. So now what I'm going to do is that I'm going to give you all specific areas in that fact Travancore audit and try to relate it with the applicable standard of auditing. Because I need not remind you all that the title of the session is Applying Auditing Standards in Practice. Right? So we're going to apply this in practice. During the audit, the staff of the auditor inform him that there is a risk of material misstatement in inventory because no convincing evidence has been given for the huge change in inventory valuation. Between these 2 years, there is a positive increase of 995% is what they are trying to say here. But he says that there's a risk of material misstatement of inventory. Why is this important? You just look at 315. SA 315 says identifying and assessing the risk of material misstatement. And SA 330 says the auditor's response to the assessed risks. This fact is now there in front of you. Let us say that you are supposed to finish the audit on 31st of July. You have got this information on the 15th of July. You have got this information on the 15th of July. 315, using SA 315, the staff have ascertained that this is a material misstatement, risk is there. He is not saying that there's something wrong has happened. All he's saying is that it's a possibility of material misstatement. I will quickly have to apply 330 now and say that how do I minimize the risk? How do I neutralize the risk? I can tell all the participants who are participating in this particular webinar that when we say that identifying the risks of and assessing the risks of material misstatement in the financial statements without any hesitation, I can say that there is an inherent risk in almost all the audits. There's a risk. It may not be a material risk, but there's always a risk. There's always a risk on the audits because things may have been taken for granted by both the parties. The Code of Ethics talks about the threat of familiarity. It's a very important threat to understand and neutralize. Threat of familiarity. I know the client very well. He knows me very, very well. We will take certain things for granted. We will take certain things for granted because this has been a relationship which has happened for many years. But then that's exactly what this is trying to prevent and saying that how are you going to respond to those assessors, you can probably do additional procedures. You may want to redo a physical verification. You may want to redo a reverse calculation. You may want to increase the sample size to check valuation. Many of these things are possible. Many of these things are possible. See, I'll just give you another example to understand that sometimes, of course, the clients will also tell you all about this because, they are also, I told you this thing of familiarity is always there, right? This concept of familiarity is always there because the clients, and you would not want to, say no to the client if it is not a very significant departure from any of the auditing or accounting standards. I will also tell you all that, though this is not a session of the Code of Ethics, but still, there's one point which I thought I'll probably tell you all, and that is that you take an audit. You take the audit of FAT Travancore only, FACT Travancore only, Fertilizers and Chemicals Travancore. Okay, we know it's a government audit. We know all these things here, but we've been doing this audit for the last, let's say, 4 years, and they paid you whatever fees there. It's been a comfortable audit. Not many questions asked. Not many problems have been arisen in the audit. That comfort is there, both the parties. It recently happened to me also, in one particular friend of mine who's, we're not, we're doing the work, but I'm not directly involved in him. So he called and said that there was a certain inventory valuation he has given to the bankers on 31st of March. Actually, he gave it on the 28th of March or 20th of March. That was because of his credit limits. He did something and gave some limits and gave some inventory. There was no, basis for this. It was just a stock statement given there, signed by the CFO and given to him. On the basis of that inventory, also gave some projections to some financial investors, private equity people, on the basis of that inventory valuation. It was a very high inventory valuation. Now in the month of June, he is finding that the inventory is actually lower. So he calls me up and says that this is what we have done. Now 20 crores is going to be reduced from my inventory. What do we do about this? He is not saying that the inventory valuation is, I'm going to revise stock statement. He is only saying that mistake has happened. 20 crores we are going to reduce. We are informing you in advance, that's all. But he also said that there are certain high value items which I can take the risk in inventory in valuing at a lower rate or lower value. That also he mentioned. The first reaction of anybody would be that it would obviously call for additional procedures. I may have to ask for more information. I may have to ask for, asking for a valuation report for the inventory and all these things. But after all these discussions happened, it was obvious that, okay, we're going to say yes because of the fact that, okay, familiarity is there and we know he's not done anything wrong. So the point I'm trying to drive here is that as long as the client is going to pay our audit fees, we cannot be completely independent. When I'm talking about independent, I'm saying that we cannot just say that we will not do anything what is not required to the client, but we will have to maintain a balance. I think that is what is a very important takeaway. How do you maintain that balance? What is that line which you don't want to cross? That line you don't want to cross would obviously depend upon how you know the client very well and how you interact with them very, very well. In the case of this particular client, I can give you all the confidence that known person, nothing is, he always calls up and tells in case something does go wrong. So he also tells us in advance about some issues that is there. So I had that, comfort feeling there, and I told him that, okay, but if you're able to justify your valuation with an independent report, you will accept it, no problem. So that is why it becomes important to think of auditing standards from that point of view. How is it that the risk of risk cannot be eliminated? There's no doubt about it. Risk can only be minimized. It can never be eliminated. It can only be minimized. To what extent do you all want to minimize that risk? I think that is what this entire auditing standard is talking about. It is possible to take other, we have spoken about that particular stance here for this, evidence here. Now, I'll spend a little bit of time on audit documentation because I have told that this is an important area of SA 230 is an important area of audit. There's no doubt about it in auditing standards. Also, generally everybody seems to be feeling, I will repeat it, saying that as long as I've got audit documentation, I am safe. There is absolutely nothing wrong in that statement. 100% correct. As long as one has got audit documentation for the audit, there will be no doubt that we are safe. The only issue we have to answer is how is the documentation, or how strong is the documentation, or probably also, the documentation we can talk about from two aspects: quality and quantity. What is the quality of my documentation? What is the quantity of my documentation? Before I begin, I want to tell you all about a particular experience I had with a large accounting firm in Hyderabad. It was obviously a very big firm, accounting firm. And I was meeting the partner only for the purposes of, general discussion. And as we were discussing this thing, we got, there was a client who came in and he said he wanted some document. And this document was dated for some 5 or 6 years prior to the date of the visit. Now, generally, we thought that, again, this is a very large auditing firm. They would probably say that, oh, you know what, we will check the documents, we'll come back to you after 4 or 5 days. It was, I think, if I'm not wrong, a partnership deed. It was a partnership which was asked for some 3 or 4 years back, prior to the date of the visit. So I honestly assume that the partner is going to say, you please come back after 1 week, I'll search for the document. If it is there, I'll give it to you. If it is there, I'll give it to you. But instead of that, he called somebody, and you will not believe this, but within 5 minutes, the document was given to him. It was a partnership deed dated some 5 years prior to this visit, and it was given within 5 minutes. So I had to ask the partner this question. I told him that, how is it that it was given so fast? In the sense that, you didn't even have to worry about asking one particular person, where's the file located and all these things. This document was just produced, within 5 minutes. So it appeared that they knew exactly where the document was. They appeared to have a process. And it also appeared to me that the client was not an existing client. So he had obviously gone away from this firm and gone to another firm. Yet they maintained the documentation. Of course, 7 years is required as per what SI 230 says. But this was obviously within 7 years, but still they're talking about. So that is what I thought I should first tell you all when you talk about documentation. Are we able to extract a document when it is required? Even before we answer that question, I think we should answer one more question prior to that. Do we know where our documentation is? Do we know where the documentation is? We have to answer that question. It is there in the file. I am not saying no. I completely agree with all of you all that, considering the limitations of time in an audit, considering the fact that we maybe staff also are not in full supply nowadays because people are not coming back or whatever it may be. There could be various such issues. Having said all those things also, still the fact remains that we should worry about, do we know exactly where that file is in that particular where the document is in that particular file. That is very, very important to understand. If we get that right, I think documentation is not a problem. I will again emphasize to all of you all saying that I am 100% sure that all of you all have maintained documentation. There is absolutely no two thoughts about this. Nobody is questioning the fact that we don't maintain documentation. I think what SI 230 sort of gives us is this guideline, which I'll just speak about, and talks about the fact that the timely basis is fine, and results, significant matters, conclusions reached thereon, and significant judgments which have made in reaching those conclusions that shouldn't coming here. But we will just come to this, what is required. No, it's okay. It's not that. Okay, so I think it's just not sort of mentioned separately there. Okay, so if you look at SI 230, you look at SA 230, it gives us a very interesting sort of, it gives us a very interesting sort of, what you can say, I'll say mandate probably, right? It says, how should your documentation be? How should your documentation be? How should your audit documentation be? For which they are saying that an experienced auditor should be able to know what work was done, how much it was done, and by whom it was done. And experienced auditor is a person who has had no previous experience with audit. That definition also has been given. Significant matters are included in the audit, conclusion reached thereon, and judgments have been made on reaching those particular conclusions. You can imagine the extent to which we have to maintain both quality and quantity of documentation. If we have to, for all practical purposes, it is like saying that we will give our audit file to a third person, independent person, and he should be able to tell us that this is what was done in the audit, these people did this job, and these are the conclusions reached. So for all practical purposes, for an example, if I look at an audit being done by us, I can, if I request either Srinivasan sir or KV Joe sir to look at the audit file, he should be able to make out, they should be able to make out exactly what procedures we did, what was the matters arising, conclusions reached there, and what judgments have been made in reaching those conclusions. Let me be also honest enough and tell all of you all that all these items are there today in the audit file in some form or the other. They are there in some form or the other. It's not that none of these documents are not there or they are absent in their file. The documents are definitely there. I think what is missing is the fact that they are not being organized properly. There is no flow to these documents. They are just kept in the file. We will have to probably take some time out and spend a day or two trying to organize these things and say that, okay, this is what was done, this is what was seen, the conclusions reached, and what has ultimately happened to that conclusion, right? That is why I put it in bold today. In this particular slide, I put it in bold because in many cases, documentation is there, conclusion is not reported. As I told you all, the end purpose of these auditing standards is either to ensure that the auditing standard has been complied with completely, or it will find a way into our report. I will give you all one example so you understand why this is important, right? Now, many of you are probably aware that last year, 31st March 2020, this COVID note kept coming on the audit report. It was invariably a other matter paragraph. It was not a key audit matter. It is not a key audit matter also, if you ask me. Either it was coming as an emphasis of matter or it was coming as an other matter in the audit report. This is 31st March 2020 when probably COVID was beginning. So if you ask me a question, 31st March 2021, if anything, the position has become worse. So the COVID note should continue. This is just a natural conclusion. We don't have to document this in any manner. We know about it because conditions have actually worsened as compared to 31st March 2020. What is the conclusion reached? Now, suppose the management says that all our main COVID problems have been over by 30th of June. Let us say they are a pharma company. They are a pharma company and they are saying that my turnover has increased because of the business there. And I don't have much of an impact on impairment, inventory, fair valuation, going concern. All that is perfectly okay. So please remove the COVID note. In your audit report, please remove the COVID note. It was there previous year, an emphasis of matter. We understand why it was there last year, because it was there because COVID was a threat last year. But 1 year has elapsed. We've been able to function normally. No significant problems have hit us, therefore remove this COVID note. This comes to the management, from the management to you in the form of an oral request given by the management. What will you do? You will say, I completely agree, because sales has gone up by 20%, profit has gone up by 25%. They have bought more machinery, they have repaid the loans. They are actually performing, being a pharma company, they are probably performing better during COVID time than the normal time. all the more reason for you to remove that particular note in the audit report. Probably you'll remove the note also. There's no doubt at all, because it has to be removed, considering the factors we're talking about here. All SA 230 is saying is that when you look at emphasis of matter, impact of COVID, look at the documentation of impact of COVID. It will be there because you'll obviously have a checklist for that also, right? You should mention very specifically that there was an EOM last year. The EOM has been removed in the current year because of 1, 2, 3, 4, 5 factors. You should not say that because of phone call from management. You should say that sales have doubled, this has improved, profit has improved. You are making your own conclusions on this basis, right? You can mention that the management requested and you have verified it. Today, we will find that most audit reports, most audit documentation, most documentation files will not have this conclusions reached their own file, conclusion reached their own matter. It will not be there because we tend to have concluded by ourselves, because in the flow of things, conclusions have been reached but not documented. So I will probably tell all the participating members in today's program that you take any one audit which you have done last year, 31st March 2020. Take any one audit, just as an experimental basis. That's all. I'm not saying that you should do it with a view to, give it to anybody, the regulators and all those things. Only for your own satisfaction. Take any one audit done last year. Look at the audit file. And just try to list out how many conclusions have been reached. More than how many conclusions have been reached, how many conclusions have been documented. Improvement in audit documentation is a continuous process. There is nothing called as a perfect audit file. The standard itself gives us, permission to amend the file later on. There's nothing called as a perfect audit file. But being a continuous process, you can make a good start this year because this year our risks are going to be greater. Last year, maybe we did a physical audit. This year, it's not going to be possible. We may not go, we may not go to the client's place because of restrictions on, requirements and all those things. I had a very interesting episode last year with a friend of mine on, bank audits, because many of you will probably be doing bank audits also, right? So she was based in Chennai. And she's an auditor. She got a branch, and I think, if I'm not wrong, Trichy. Trichy branch she got. And she didn't want to go because she said, okay, COVID pandemic, I'm not going to travel. And she called the manager and said that, I'm not going to travel. I don't want to travel. We'll do the audit later on. Because there were restrictions in place on travel also. I can't obviously travel. So I'll see the audit later on, or I'll refuse assignment. She said, in case you're forcing me to come, I will refuse assignment. The manager was obviously very keen to get the audit done. He said, no, madam, don't worry about coming and all. We understand you don't want to come. But our branches, he gave some brief history of the branch and said that I will give you some provisions also to make. You make some provisions for NPAs, but you please sign the audit report and give it to us, because we have to get it done. Head office is putting a lot of pressure on us. He also gave us some, he also gave some provisions. She said, madam, you come later on and do the audit, no problem. Of course, she obviously refused because it's not an audit she could do in this manner. But see, this is what I'm trying to say. You look at what conclusions you all have reached. You all will find that at least in 4 or 5 areas, it is not properly documented. Out of those 4 or 5 areas, you please correct 2 areas this year. Caro report conclusions. Your Caro has got a table for contingent liabilities, disputed taxes, undisputed taxes. Some items have been removed in the current year. Why was it removed? Conclusions reached. Have you seen the assessment order? This is what we're talking about in terms of documentation here. So that is why those judgments and all are required for the purpose of reaching those conclusions here, right? Who performed the work and the date on which such work was completed? Who reviewed the work performed and the date and extent of such review? Again, I'm not saying this with the view to sort of criticize the many members who have done this, but we tend to, because the checklist is being used, right? Because checklist is being used, what we tend to do is that we tend to just initial off without putting names there. You will not know who is done it here. It will just be an initial, just one initial will come, and that initial will be could be of anybody, so we don't know who it is. All that SA 230 is saying that please be very, very specific who has done the work and who has, reviewed the work. It's very important for that to also mention here, right? Then we talk about this part again. Discussions of significant matters with management, those charged with governance, others, including the significant matters discussed with when at whom the discussions took place, and then we should also see how his address is inconsistent. So we talk about this TCWG, those charged with governance. Now again, many people will probably think that I can't keep documenting all these things because it will take a lot of time, and I don't have so much of luxury of time in this particular audit. In fact, Travancore wants it by 31st of December, 31st of July. We will not be able to do this before do all these things. We will do only the main things. But please look at it from a different perspective, right? How many times during this course of the audit are you actually going to go and ask the management questions and seek their responses? I'm talking about management here. We're not talking about people at the ground level who are giving responses to audit. That is a part of one more document, audit documentation, that's different. We are talking about management here. For example, the going concern note, for example, the COVID note. Those are going to be 4 or 5 areas wherein you are probably going to talk to the management, let us say twice during the audit. What is SA 230 requiring? Document those 2 visits. Document what happened in those 2 visits. So that's what we're trying to say. And when I'm saying documenting, we are not talking about a situation wherein we have to put a lot of details of what is the documentation about. That is not what we want. We just want a summary. This was discussed and this was what the conclusion which was reached. You can see the word used in SA 230. They are talking about assembly of the final audit file. This is something like a definition of manufacture in Central Excise Act. Assembly of final audit file, they are saying. You will have to start assembling the file. Timely basis. Do not discard any audit documentation of any nature before the end of the retention period, which is 7 years. New records, if you want, after the file has been assembled, specific reasons for making them, when and by whom they were made and reviewed. Okay, so I'm not going to spend too much of time on this because this concept of assembly and all is too large for us to probably think about, but we know how this works in actual practice, right? During the course of the audit of fertilizers and chemicals Travancore, you are going to probably have about 3 or 4 files because each of the individual article clerks and managers, assistants who were doing the audit had their individual files. Now it all comes together at some point of time, and they probably make it 3 different files and say, okay, this is what was done here. Each person different areas of the audit, and this is what they have done, and this is the conclusion reached. This is what we normally do in some medium-sized audits also. When we are talking about assembly of the final audit file, there are 2 stages to this. Not mentioned in SA 230, but what I am mentioning. The first stage is you will review the documents in the file and try to organize them in a proper manner. That is the first thing to do. Only if we have got the files organized in a proper manner can we at least think about putting those conclusions in reporting. If the file is not organized in a proper manner, then we will not be able to get the information we want also. Once we do that, then the second stage is move on to the conclusions reached. What are the conclusions which have been made in those individual areas? The SA 230 is not only about gathering of documentation. It is also about writing how the audit was completed and how those specific areas in the audit, were actually addressed. It is not about building only documentation and saying, I've got a very big file, I've got all the documents there. You ask me whatever document you want, I can give it to you. If you want me to give an insurance document of 15th of July 2020, I can give it to you. That is required. I'm not saying it is not required, but that is only one piece of the documentation puzzle. You will also have to look about how, that's why the standard is talking about the word called as assembly of final audit file. We know how it works in practice. I actually given you a very small example of a file here. You can see this audit file, what it contains here. Table of contents, what are the deliverables? The deliverables have been put in the file: audit report, final financial statements, letters to the board of directors, MRLs, others if any, and then we've got engagement letter here. Then we've got the audit planning. What is the audit planning document? Analysis. What is my risk? What is my materiality calculation? Responsibility matrix. Who has done work? Who has done what? We've got specific areas in the audit file for this. You look at this part called discussion. This is what I'm trying to sort of, emphasize on. Correspondence, including emails. In an audit which is being done in this particular year, 2021, email correspondence may be very, very important document audit file, because confirmation of balances may have been received by email. We may not necessarily get confirmation of balances by post because couriers may not be working. Major decisions may have been made by email, may have been taken by email. Confirmation from, let us say, a director for a certain transaction could have been done by email. That also will have to be documented and put in our audit file. And then, of course, we've got this detailed head-wise working and miscellaneous document. So I have given here only one structure, starting with conclusion and going to individual head-wise working. Say, for example, for salaries, you will take how many months of salary have you test checked? What are the documents you have test checked for salary? There could also be some other miscellaneous documents. So this is a flow which will happen in the final audit file commencing from these documents. So this detailed head-wise working is where we will commence our audit. If you go from this slide onwards, you will say detailed head-wise working, copy of requirement list submitted and what is the status. You have asked the person in charge of audit for, let us say, bank confirmation. Today you have asked him for bank confirmation. When has it come? It will come directly to your, obviously it will come onto your email ID or to your post address, but when has it come? That documentation, just keeping the bank information in the file does not matter. You will also have to document when it has come. Nowadays, of course, there are also, some websites called as confirmations.com, which enable bank confirmations electronically, but also can be used by you. But I mean, those are techniques which are used in the modern age here, but you need not necessarily have to do that also. It's not mandatory, at least. What is the confirmation state? In case there's a difference, has it been reconciled? You can see this bank balance. When you look at the bank balance, detailed headwise working, you're going to say, okay, bank balance in HDFC Bank, Ernakulam branch is 1 crore of rupees as per books of account. As per the bank, it is 1 crore and 10,000 rupees, because they have put some 10,000 rupees interest at the end of the year. Bank has made, we have not made. So that appears as a reconciling item in your bank reconciliation statement. In your headwise working, you will say, okay, bank balance 1 crore, 10 lakhs of rupees. Difference is reconciled because of interest entry. Have you passed the interest entry or not? It will be an audit entry later on. So that is how it will be concluded. Okay, this is an audit entry, therefore it has been passed subsequently. The end result of this audit file should be that most of these documents should start talking to each other. So, as I said, we have one audit file. So I'm not talking about the master file here. Master file contains all your, incorporation documents and all those things. That is doesn't require. It's only once in a time requirement. Right from commencement of the audit of this fact-driven FACT up to conclusions reached, you will have to keep on at this documentation, keep on adding documentation, removing what is not required, writing basis for conclusions, writing what are the conclusions reached there. This has to be a continuous process. I'm going to repeat the question all of you are going to probably ask me. I gave the example of fertilizers and chemicals Travancore, but you are going to say that I have got a small private limited company in Cochin. He is my client. He's got 50 crores turnover. Client for the last so many years. No rotation threat. No threat of familiarity also, because I know him. He knows me very, very well. And I can't do so much of documentation for him. This is a very, very valid, I will repeat, this is a very valid thing which comes up in many, many situations when you say that this is just not possible, because the very fact that I know him so well means that tomorrow, suppose some document is asked, it could also be an MRL. It could be a representation letter. It could be a confirmation of balance from a related party. It could be a loan confirmation from the director himself. Any of these documents, if you want, I can always get them later on. So we don't want to get into a discussion about getting these documents right now because we feel it is not required and it's going to take too much of effort, time, and all these things. This is, as I said, not at all invalid document. This happens in most of the cases also because we know that this threat of, I won't say a threat of familiarity, but we know that the client is very, very familiar. They will definitely give what you want, no doubt about it. Or while all that is perfectly acceptable, and whatever you all have said is definitely acceptable, I would still feel that in the present situation we are in, not that anything is going to go wrong with audit. We know that there's nothing going to go wrong with audit because everything is known to each party here. Still, I'm saying that you may have to build up this documentation in the manner required, timely manner, because nobody knows tomorrow what is going to happen, right? Nobody knows tomorrow what is going to happen. Because of, I'm not talking about COVID and all these things. Generally, also we are saying, we're not talking about this specific COVID requirement. Generally, we don't know what is going to happen tomorrow. Also, we are putting so much of faith on each other that nobody has actually tested if the document is actually going to be there when it is asked. We have seen this in many, many cases wherein this document is asked subsequently, it is not available. We have to renew the entire documentation and start looking at the entire documentation again. So that is why you need not think about it from a very detailed perspective, but just one simple, you will probably meet this client only once because you know all the factors, you know all the issues. You'll probably meet him only once in one meeting. In that meeting, what happened? What were the issues discussed? What was the resolution given here? I will also tell you all in a different context. And as I said that, the way in which the profession is placed today, the way in which we are placed today as a profession, it is not that people are doubting our capacity, our credibility and all these things. That is not there at all. That is not the point at all. There's no doubt that we are all doing our job to the best of our ability. Somehow there seems to be an impression outside that the auditors should probably be a little bit more diligent in their functioning. Now, this is a completely one-sided view. We know about it. We know our responsibilities and all these things. But the only way we can probably defend ourselves is to build up our documentation. I will probably repeat this any number of times saying that we are doing this to the best of our ability and best of our knowledge and all these things. Having said that, because the outside world is looking at us, or let me put it that the expectations of the outside world have become much, much, much more larger and wider in terms of auditors. It is very easy for regulators to sort of, put blame upon the auditors and charge them with, not doing the job properly and all these things. Ultimately, what is going to happen is we are only going to be saved by the documentation which we have got, howsoever familiar the client may be. Now, it's not that, the institute is using this word called as professional skepticism, which just basically means to say that look at the transaction from an indirect, from a very skeptical point of view, right? The client may be completely right in getting a fair valuation report, which is a very optimistic fair valuation. You may also have a valuation report to defend the stance or justify a stance. But still, as an auditor, it is your responsibility to ensure that the skepticism creeps in and finds out that is that fair valuation of the property in Cochin really worth so much? You know about the approximate prices in Cochin. What you will know also is that in case it is too large a price or it is too large a variation, you may have to call it out. That is what we are trying to say in terms of this maintenance of professional skepticism. But the correspondence and all these things become very, very important. So what's normally missing? This is what we already spoken about. Cross-referencing also with other documents. Note and conclusions. I think that's why I said, when you all do this exercise, for any audit which you are doing, you will understand what is missing here. They're talking about 7 years. This we already spoke about. Now, the questions are whether this can be done in an electronic form. Absolutely yes, no doubt it can be done in electronic form also. Physical form may not, it's not mandatory. You can do it in electronic form also. Now, these are, I'm going back to the fertilizers and chemicals Travancore audit and looking at the 500 series. This is something which is a bread and butter for any audit. We do this day in and day out. Evidence, external confirmations, opening balances checking, analytical procedures, audit sampling. This is bread and butter for the audit. This is something which we do for every audit, whether it is required on a consistent basis or not. We keep on doing this. We gather audit evidence. We send out external confirmations. We check the opening balances. We look at analytical procedures. And we also, in individual areas of audit, we choose samples for each area of audit. Nobody is going to add on to this what we have already done. So now that we have finished with documentation, we look at this particular case. I've just mentioned that this is what the numbers which are coming in from, the fertilizers and chemicals Travancore. I just put some numbers just to say that, they're somewhere close to the actual numbers, but I'm just saying that, you are commencing the audit. Let us say on 31st March 21, right? So let us say you're commencing the audit on 15th of April, right? And you have to do it by 31st of July. These are the numbers you have got in front of you for sales. What do you have to choose as per the sampling auditing channel? What do you have to choose? You will have to choose how many invoices you're going to check for the year. And this is basically what we popularly call as vouching, but it's not only a question of vouching nowadays, it's also how many new customers there. Are there different terms given for these customers? And probably one of the best things you can look at is this reconciling with my GST data? Because with the client's GST data, because the GST data appears to be giving some sort of third-party validation that these numbers are correct. You will choose, let us say, obviously to answer the question, how many invoices you will check, it depends on how many number of invoices have been generated. So if there are, let us say, 1,000 invoices in the particular year, how many you will check will depend upon the quantum of invoices, how many new customers have been there, and all these things here. But one good method of getting a third-party confirmation is to have a RICO with the GST data. Now, we are not asking you to do the RICO yourselves, but as a part of the audit sampling, you can check and see if it is also matching with the GST data, because that's a very good, what you can call as third-party counter check to ensure that this is there for this thing. Similarly, for purchases, you check number of invoices, again GST records for input tax credit. The company has paid salaries worth 233 crores in the year. What is going to be a test check for salaries? This word which I'm going to use here called as walkthrough. Very important word. This word has come in courtesy Enron 2002. See, as an auditing fraternity, we should still be very thankful to Enron for a lot of things, though Enron happened in a negative way. This word called as walkthrough, internal control over financial reporting, rotation of auditors, whistleblower policy, all this is thanks to Enron. Walkthrough means what? They said that they did something called a Sarbanes-Oxley Act. In that, what they said, and which is why it's important from the auditing point of view also, is that they said that the auditor will choose one area every year. The auditor will choose one area every year, and he will do a complete walkthrough of the area. When they're talking about walkthrough, they're talking about a situation wherein commencing with how the transaction is starting, ending up with the journal entry in the books of account of the financial statements. Complete walkthrough. To identify any internal control issues that can be corrected. This is the purpose of this walkthrough. Let us say salaries. You all will take, in the case of fertilizers and chemicals, Travancore, you will take 233 crores is the worth of salary, divided by 12 makes it about 20 crores per month, obviously. Right? You will take 3 or 4 random months, and you'll say that, okay, commencing from how the salary statement is commenced, how it is generated, ending up with how it is actually paid. You do a complete walkthrough. Who does this particular job initially? Who approves it? Who sends the money to the bank? Who gives the TDS details? All these things. The walkthrough was meant to be for the purposes of internal control over financial reporting, but I am saying that do it for the purpose of audit also. check this from start to finish for 2-3 months. Any 2-3 months which you all can choose. For the finance cost of 300 crores, a confirmation from the bank is more than sufficient. You all can use the confirmation from the bank as a basis for checking the finance cost and how much you will have to check for the finance cost, because the bank will obviously give a confirmation. There will obviously be a bank statement. You can also check this finance cost could also be from third parties, others, NBFCs, related parties can also be. All that you'll have to do this finance cost here, right? And this is for external confirmations. Again, I did not tell you all about this at all because I'm sure that all of you all are doing this on a very extensive manner, doing it in a very regular manner also. And we normally take confirmations from, let us say, the bankers, trade receivables, some trade receivables, trade payables. In the case of Fat Travancore, it was subsidy, and we may probably get a subsidy from there's some subsidy issue there also. So related parties and all these things. The only thing which I would like to mention here for this external confirmation, banks, there is absolutely no doubt we will take, because courtesy Satyam, we are going to take. Even if it's a small bank, we're still going to take the confirmation. So no doubt about the bank reconciliation. It will come in there, and bank confirmation will come in. We'll check with the reconciliation statement and we'll do it. No problem at all. But recently we had this experience which I should tell you all. One audit which has been done by a friend of mine. So he calls me up and says that because of this COVID situation, 2 or 3 banks have not given confirmation of balance. And the natural question we'll ask him is, okay, are the balances very, very significant, or how is it? He said, no, but the balances may not be very significant compared to the balance sheet, but still the bank has not given the confirmation. So I told him that you should probably ask the company to think of some alternative method. Maybe physically you go to the bank yourself as an auditor with the company's person and get the confirmation. He said, why would that would not amount to independent confirmation? I said, because you are going with him, no, so it will almost be independent confirmation. So next day he went with the company representative to the bank and actually physically sat in front of the person and got a confirmation. Bank confirmations, non-negotiable. You will have to get it. If a bank confirmation does not come, please see where you can put it in the audit report. It's as simple as that. There's no two discussions about it. Trade receivables, trade payables, we could have some, relaxations, because the list of trade receivables can be very, very high. The length of those numbers can also be very, very high. The number of parties can be very, very high. So you can do a sampling here and choose. See, the purpose of this external confirmation is only goes as an audit procedure to ensure that you are satisfying yourself reasonably that those balances are appropriate. If the other person is informed about it and gives a particular confirmation of balance, there's nothing you can do about it. There's nothing you can do about it, because it always happens this way. But I'm saying that we are going to take this at face value and ensure that if the statement comes, it is going to be a part of this thing here. But I would also like to, emphasize to the members today about this particular thing called as related parties. And why I would like to emphasize upon the members today on related parties is because the fact that, see, at the outset, let me tell you that related party transactions are not wrong, or it is not an offense to enter into a related party transaction. There just seems to be this misnomer somewhere that, it's offense and all those things. If it was an offense, they would not have given disclosure requirements in SEBI, Companies Act, and as well as in accounting standards on these related party transactions. The problem in the related party transaction is going to be that this word called as arm's length is definitely going to be a question. The word called as arm's length is definitely going to be a question for all of us to answer. Is the transaction really at arm's length? But even before that, we will have to answer one question. Is the party a related party in the first place? Because the definitions of a related party as per Ind AS, as per Companies Act, as per SEBI, there is a possibility that the related party definition is subject to interpretation, let me say. That will be the first possible problem we have to solve, right? If it is not a related party, you will have to ask why. You'll have to question why. You'll have to get a justification. Why are they saying it's not a related party? The transaction being at arm's length, thankfully, if this is going to be an Ind-AS company, it will have to be done as per the Ind-AS standards. But even if it's an AS company also, you cannot give it free of cost. There has to be a certain commercial value to that particular transaction here. I probably would think that we should enhance the coverage of confirmations from related parties, because just because the party has been related, it is possible that influence can also be used. I can influence my related party to give a particular confirmation, though that particular confirmation is only a document, but we can ask further questions and all these things on this confirmation. So I would probably urge that in case there are transactions with related parties, please expand the scope. Ask for more confirmation from the related parties. As far as analytical procedure are concerned, this is an exception which I'm sure that all of you are doing. I have taken this from the financial statements of Fertilizers and Chemicals Travancore. This is only going to be your initial statement. So don't worry about the marks and red and numbers and all those things. It's not the point. We only wanted to highlight to you all about these areas here. And the general trend is to look at something which is more than 25 or 30%. Ask for further information. In this particular case, there are only a few things which come in here. But if you can see here that there are some very large items. I told you about this changes in stock. The changes in stock was minus last year. It became positive in the current year, and 995%, which has been increased between 20 and 21. These numbers have swapped. It's actually for 1920 in the actual financials, but that doesn't matter. A 995% increase in stock would mean that, just logically speaking, it has to be shown somewhere in the financial statements. It has to reflect somewhere in the financial. It has to reflect either in the cost of materials consumed, or it has to, be a part of our inventory. So this is what the analytical procedure would lead you all to. It will lead you all to ask a question saying that what has happened to this, or what is justifying this increase of 995%? Where has it gone? Where is it going to be shown? Or where has it been shown? And that's what you're going to ask for in your this thing here. So this is just a simple comparison between 2 years data. This is just taking from the face of the balance sheet. From the face of the balance sheet, we have culled out this information, and we have asked them for this. We're going to ask them for questions. Let us say beyond 20%, whatever comes in, or 25%, 30%, that number you can think of. Whatever is the number you are getting, you all will have to this thing. So now that you know this analytical review has come in here, so let us say that you're going to put this as a sheet saying that changes in stock 995%. What is the justification given by the management? Maybe you all should probably write that the purchases were this much, and it is now lying in inventory. Inventory has been valued so much. Maybe that's your justification in your audit file for this particular item, and saying how it has been reflected in the financial statements. So this is where you will have to look at justifying these things on the basis of materiality and all these concepts which are there, right? How much to take would depend upon the size of the audit. I'm not going to impose a number upon all of you all, but 25%, 30% variation is considered to be the minimum to pick up for the purpose of justification for asking this for the analysis. If you look at the other item, which is probably changed a lot, it is purchase of stock and trade. So since we have already going to ask the question on stock and trade, we can probably also justify the purchase of stock and trade by asking the same question there also. In most of the cases, they would probably be linked to each other, right? They'll probably be linked to each other. The other item you should look at is this exceptional items. Now, I think in terms of crores, it's 972 crores. It is 433 last year, an increase of 55%. I have chosen these two things because of two reasons. One is that the very nature that's called as exceptional item means that something which is very, very, exceptional in nature there. So an increase of 55% from last year, does not, we will have to look at We'll have to look at other, issues, why this increase of this much has happened, and all these things. If you go to the statements and dig deeper, you find that this is because of sale of land, apparently. Sale of land which has been given by the government of, or mandated by the government of India. So it has been shown as an exceptional item. Again, you're making this analytical review and coming to a conclusion that the necessary procedures have been followed and this is okay. This is what has happened here. Actual money and the actual land has been sold for this much of this thing and this much of money has been received by the company during the particular year. See, many a time what we will do, we will take this analytical review only from the face of the balance sheet. Though in this particular case, I have taken it from the schedules. I have taken it from the schedule, means I have taken it from the revenue schedule and then gone up to the face of the balance sheet also. So if you take this as your main document for analytical procedures, you will drill down further. Maybe you will prepare one more schedule asking for more information on those subtopics and then try to reach a conclusion whether the variance has been justified. You will do this both for balance sheet as well as for the profit or loss account. And the drilling down will happen to an extent wherein it is possible to get the information from the face of the financial statements or from the financial statements themselves. We are all doing this. We do this very, on a regular basis. We do this and check what is the variation from the previous year to the current year and that tolerance limit of variation for which you take your analytical procedure would obviously have to be decided depending upon the items there, composition of the item, what is the information which is available in the company. Along with this, to justify all this thing, you may also have to look at a few ratio analysis. Net profit ratio, current ratio, net equity. I've just put in the mega ratios here, the main popular ones here. Because if you are going to justify, if there's going to be a justification for, let us say, the increase in the inventory, right? Is going to be justified by increase in inventory, your inventory ratio, stock turnover ratio, should also probably justify that particular increase. So there should obviously be an increase in that stock turnover ratio also because your inventory also has gone up by more than 995%. The ratio may not necessarily go up by 995%, but there should be a justification. There should be justification. That's what I'm trying to say here. So you all will find that in most of these cases, this linkage becomes very, very important. How do I link these various different items here? Now, again, what we will do, net profit ratio. Okay, net profit in this particular case, let us say that there's been an increase on 83.32% on net profit ratio. With an increase, again, very, very natural thinking by any chartered accountant, increase of 995% in stock, right? Net increase of only 83% in profit or loss account. So there has to be a decrease somewhere. Somewhere this has to be decreased to meet this effort of 83.32%. So this is what we are trying to look at in an analytical procedure. Does it overall match by itself? Does it overall match and does it justify or can it be explained in a satisfactory manner? So this is what we will have to do, or this is what we will have to check at the time of doing our analytical procedures. Now, another important thing which I thought I should probably mention to all of you all, again, this is I'm sure that this is being done by many of you all in the individual audits that are handling, but I would like to sort of, further give importance to the fact that this review or this analytical procedure also has to go to the cash flow statement. Not many of us do it, and there's a reason why I'm saying this, right? Many of us don't look at the cash flow statement because of the fact that we feel that it's a part of the financial statements, and basically where does your cash flow come from? From your balance sheet only. So when you're doing the movement for the balance sheet, you should also automatically take into account the cash flow also. But there's a reason why I'm saying this. I'm talking about the fact that you look at the cash flow statement of a company. You look at the cash flow statement. If you look at it in individual compartments, it will not make any sense to you because we will know that there's an increase in the operating cash flows. We know there's a decrease in the investing cash flows and probably a slight increase in the financing cash flows. These are basically numbers which are coming up from the balance sheet, from the financial statements. That's why it looks like that. But if you look a little bit more analytical into this, you'll find that, okay, in 31st March 2020, which is the previous year, there has been a significant increase in the financing cash flows, which means that the entity has taken funds and there's been a significant increase in the financing cash flows. It has to show up somewhere else at some point of time, either in investing or in operating. It is possible that the entity has borrowed money or taken financing, and till the project has been fructified or till the project is being completed, they have pushed it into your bank account. So some interest money has come in there. So it could be investment cash flows. Or they may have actually gone and purchased property, plant and equipment, taken a term loan, purchased PPE. Production has gone up, sales has gone up. We will have to look at this analytical review for the cash flow also, not in terms of absolute numbers, but in terms of where those cash flows have ultimately been used or where they are going to be utilized, likely to be utilized. A very important part of this is because analysis of the cash flow can throw up a lot of, I'll not say issues on going concern, but it can throw up a lot of cash flow issues. It can throw up a lot of cash flow issues. So you'll be able to probably make out that this company is probably going to have a cash flow issue. I'm not saying that, there'll definitely be an issue because you can always borrow further money and all those things, but at least the red flags can be thrown up because of this cash flow analytical issue. You're not going to put this on absolute numbers here. We're going to base it on the fact that how has those cash flows been ultimately utilized? So there's not a question of, a sequential increase in operating, financing, cash flows with a decrease in other areas of those things also. It doesn't go on that, one-to-one basis here. Invariably, what will happen is that if I increase my operating cash flows this year or my financing cash flows have been increased this year, possibly my operating cash flows will improve either in year 2 or year 3 only. It may not improve in the same year. It will probably possibly improve in only year 2 or year 3. We'll have to look at that connection. That connection becomes very, very important for understanding why this cash flows become important. Audit evidence, how much will you all take? Invoices, agreements, minutes of meetings, confirmations. Now I told you about emails for some transactions, email confirmation. Whether client is going to be permitted to give you email evidence, will he give you his email printouts? Again, all these issues come up, especially in this COVID time of audit, because in this type of audit, what is going to happen is that many decisions have been made electronically. Let us say that a major, even in video meetings, even meetings have been held electronically. So how does, you may have physical minutes, but the meeting itself has been electronic. So how do you handle this in terms of, evidence which has been given here? Now the word evidence would obviously mean that we are trying to collect some documentation or collect some evidence to justify what we have been saying, to justify the conclusions reached, right? To justify the conclusions reached means that we are trying to say that, excuse me, we are trying to say that based on these documentation, based on these evidences, we have got this much of justification for this particular conclusion reached in the audit. Again, the auditing standards are not going to tell you all what evidence to take. The auditing standards are not going to tell you what evidence to take. That is completely independent, audit dependent. For example, last year you have taken a confirmation of balance from a particular trade receivable, or even let us say a bank account. A bank account I will not say, because bank account, please take it every year. Last year they have taken a trade receivable balance there, which is very significant in amount. Current year, no transactions with the party at all. Very limited transactions. Actually, no transactions. The balance is the same. Whether you will want to take evidence this year, again, a confirmation or not, is completely dependent upon what is the amount of balance then, and whether that party is, a regular customer and all those things here. So again, all these issues about whether it can require to be taken for all the parties, sampling to be taken, how many samples do you take? All these become important for this decision to be taken. We will now move on to the 600 series because of the fact that in a company like Fertilizers and Chemicals Travancore, it's a large company. It is not going to be possible for us to just do the audit on our own. We will have to require an internal auditor. Obviously, we'll have to use the work of an internal auditor. In some cases, we may have to use the work of an auditor as expert also. We may also have to use the work of another auditor itself because of the fact that it is possible that there can be a branch auditor. There can be an auditor of this company based in Bangalore, is done by a Bangalore auditor or by any other auditor somewhere else, just branch office, not necessarily manufacturing office. So one of the things which I thought we will tell you is that, okay, another auditor, we are very clearly mentioning in the audit report. Suppose you all have got the audit report of a subsidiary company based in Bangalore, done by another auditor, audit firm. So in your audit report, you're going to say that one subsidiary company audited by one more auditor. So this is a part of your audit report. You're saying that this is not done by me. You're giving a confirmation it was not done by me, done by you. So this is one way to look at it, right? Internal auditor is a little bit of a different thing because there's a mandate in the company that for certain size of companies to have an internal audit. Now, again, in the case of this Fertilizers and Chemicals Travancore, what has happened is that you are commencing the audit on the 15th of April and you're going to conclude on 31st of July, as per the mandate at least. Can you do 100% transaction checking? No, you can't. Can you check all the documentation? No, you can't. Can you do also physical verification? No, you cannot. So there you will have to use the work of an internal auditor. You will have to look at what the internal auditor is saying in his report. Sometimes you all may run into the situation saying that the reports of the internal auditor are repetitive. Queries raised and responses are almost the same in all the 4 quarters. What will be your response as an auditor? We have seen this happening in a few cases. Again, this is nothing to say that the members have not done their job and all those things, but sometimes it does get repetitive. In an infrastructure company, we observed this. We saw that the internal auditor is saying that loans and advances, balances pending for a very long time. They will mention also SR Enterprises, KJ Enterprises, all those various companies pending for more than 3 years, pending for more than 5 years, pending for more than 6 years. Or the schedule is given, aging is also given. The response of the company is that these will be reviewed in the subsequent quarter. Point noted will be reviewed in the subsequent quarter. This has been happening for the last 4 quarters. And you are the statutory auditor, you're looking at this report and saying that the auditor is saying the same thing, companies are responding the same thing. What is happening here? And more than what is happening, what is your responsibility as an auditor? Does it have to be provided for? Very obviously, you cannot question the report of the internal auditor. You can't get into his territory. Okay, one is okay, maybe fellow member, so you can't get into it. Second is, why would you get into it? You do not know under what circumstances the audit has been done by him also, right? So you cannot get into his territory. There are 2 things you can do. One is that you can talk to the management and tell them that one particular party, can we get a confirmation that is actually going to pay you? Whatever correspondence you may have got. You only said that you are going to be reviewed. What are you going to review? Has he paid you in the past? Have you written out some items in the past? So that further process, which the internal auditor could not do, maybe you all can do. It is also possible that you all can bring this to the notice of the audit committee and tell them that, can you please give or can you ask the internal auditor to ensure that responses given by the management are also accommodated in the report next year, so that he knows that these are the risky areas and this is what the response has been given here. You all could also look at recommending to the internal auditor, telling him that, or the management saying that can you have a policy? Because this is linked to your ECL model. Again, your ECL model, in case they are following Ind AS, there's something called the ECL model which has to be followed, right? Expected credit loss model. So can they push this into that also? Right? Is this a part of the ECL model? Are they making a provision for ECL or not? So all these questions can definitely be considered by the, when you're talking to the internal auditor, I should probably mention this about them. You see, we're not going to doubt his work, but we're going to say that maybe additional procedures may have to be followed in the next year. For you to reach a conclusion, you always got this Caro report saying, can the internal audit be strengthened? Is it coverage sufficient? Can be strengthened? You can use that. But as I mentioned earlier, this SA 620 is a very interesting area. Using the work of an auditor's expert, and this has come into a SEBI notification also. It is yet, unfortunately, a requirement of the Uday Kotak committee on SEBI, but yet to be notified by SEBI. It's come in as a recommendation by SEBI, but yet to be notified. What is the meaning of using the work of an auditor's expert? Let us talk about the inventory only in fertilizers and chemicals, Travancore. The justification given by the management can possibly be that there is one item of very high value imported chemical which we have imported. The import has happened sometime last year. A lot of it is lying in stock. In fact, in India, the price of this is actually increased because of the landed cost and all those things. There's been a tremendous market for this. I can increase it in the market and for a higher price. I may not necessarily use it for the purpose of my production of my fertilizers or chemicals. Explanation given by the management. As an auditor, you are not very clear about what this is. You're not very sure that this is what the company is saying is actually correct or not. You're not very sure about it. This SA 620 gives you the freedom to use the work of an expert. Maybe somebody who's very familiar with these chemicals, maybe a valuer, maybe get a valuation report. Ask him to give a value. Ask him to put in a value. Ask him to prescribe a value. Ask him whether the value given by the management is correct. Ask him to give a valuation report. The Uday Kotak committee has suggested to SEBI saying that in cases such as this, wherein the auditor wants additional information, wherein the auditor is requiring additional information, he should be permitted to appoint an independent expert and rely on the expert's opinion in his audit report. It can also be for fair evaluation. It can be valuation of financial assets. It can be valuation of property, plant and equipment. It can also be, as I mentioned to you, tax situations, complex tax laws, whether to claim ITC or not under GST, whether to claim export benefits or not under income tax, can be complicated areas of taxation. Get an opinion. Now, this is not opinion from the company side. They are saying that auditor's expert, which means that you have got the freedom to appoint one or ask the company to appoint for one more expert and claim a third opinion or seek an independent opinion just to ensure that you all have got confidence, you have got comfort in this particular thing here. I'll just give an example. I've repeated the same thing here in the way of an example, but I'll tell you all about why this also is important. And all the more reason because FACT is a government company. This happened in another government company. The transaction was slightly complicated. It was a financial instrument. I'll not get into the details of the transaction. The transaction was pretty complex. It was basically a CCPS issued. CCPS issued by the one company. Holding company was a guarantor. It was given to some investors. Terms of conversion were actually fixed. And there was a backstop arrangement, some guarantee given by the holding company. It is a pretty complex instrument. The statutory auditor did not understand this instrument at all. So he said he knew that there's something called as compound financial instrument in Ind AS, which required splitting as per this liability and debt component. The company had done this splitting on their own accord. So he just wanted to ensure that what the company has done is correct. So he wanted to have the opinion of somebody who is aware of Ind AS and aware of this transaction to give an opinion. So they had approached somebody whom I know, and the person gave the opinion. So opinion, my inputs was there in the opinion. The opinion ultimately was given. No problem as far as the opinion is given is concerned. So what has the auditor done there? He told the company itself that you please talk about this and ask for an opinion. Now, when the opinion came, they said, yeah, it's a compound financial instrument. Definitely it's a compound financial instrument. So whatever the company has done is correct. We agree with what the company has done. No two ways about that. No arguments about that. The C&AG did not understand this transaction at all. Again, from their point of view, also they did not understand the transaction. They said, we don't know what is the compound financial instruments. All sorts of complications have come into this particular document. We're not understanding this. So despite the opinion given by the company's Ind AS expert, so to speak, the C&AG said that please get an opinion from the EAC of the ICAI. Because according to the C&AG, the ICAI's ECA is the EAC is the expert. So the company approached through a chartered accountant, approached the EAC of the ICAI, and they gave their opinion. Opinion given by the EAC was directly in contrast to the opinion given by the Ind AS expert. Ind AS expert said compound financial instrument. ICAI said that it is equity only. Sorry, it's only liability only, not equity, liability only. And the company had to follow it because they had a mandate from the ICAI saying that you have asked for it, now you got the opinion, so you have to follow it. You will have to do it as a restatement and do adjustment and all these things. So many times what will happen, the point which we wanted to drive here was that in the course of an audit, it is possible that there can be such complicated transactions which come up, which an auditor may require the use of an auditor's expert. The SEBI guideline which is going to come out is going to say that in such areas of dispute or in such areas when the auditor is not comfortable, he can ask the company or he can tell the company that you please appoint this person as an independent expert. We are appointing him. The fees will be paid by the company. This, as I said, is a recommendation given by the Uday Kotak committee, accepted by SEBI, will probably be implemented in some time. So this also becomes an important part of this thing here, right? This is what I mentioned here. So what is the impact of COVID on audit? Now, I've already discussed this in the course of my presentation, but I'm talking more from the point of view of an audit report. And these are the top areas. ICAI has given a lot of guidance on this. All the regulators all across the world have mentioned that it is possible that these could be possible areas of impact of COVID. It could be inventory because valuation could have gone down. It could be impairment because fixed assets are not being used. Fair valuation, again, markets may probably not be as active as they were in pre-COVID days. Trade receivables, we are seeing so many companies being shut. So what about the trade receivables? Are they going to come in here? Going concern, again, whether it's a going concern or gone concern, what is going to happen here? These questions will definitely come up here. Now, just to tell the members who are participating here, a very important development is happening. And this is happening at a very SME sort of a level also. So therefore, it is very important to understand this now. So a friend of mine who's running an industry in Bangalore, and he supplies, I think, to these large automobile companies like, Ashok Leyland and all those people. I think that they are his main clientele, Ashok Leyland and all those people, right? And he basically does job work, machine work through a CNC machine. Various automobile parts are cut in different values of precision. His main customer, I think, is TVS, the TVS group in Hosur, I think. Yeah. And I think Ashok Leyland also doing some work for him. Now, recently, they have called him and told him that, okay, now that you have started your factory, very nice, but, we want to know a few things. We want to know what are your plans for continuation of business. What are your plans for continuation? What is your balance sheet? I mean, we don't want to give you the balance sheet. What are your plans? A company like TVS or Ashok Leyland asking this information would mean that they are also feeling that impact of COVID can be on these people who are also doing work with them. as I have said earlier, we have all got in some way or other impacted by COVID. From an audit point of view, I think these are the areas wherein additional focus would definitely be required, not because of a regulatory requirement, because we know that this is the core of any company's financial statements. I have not put revenue here because revenue is so obvious that if there's a hit in the revenue, the concept of going concern itself can be questioned because revenue has taken a big hit here. I will still put a disclaimer saying that this is only a representative list, but we will have to look at specific areas for. Why is this important? Again, auditing standards followed for this particular purpose. This is an accounting standard requirement. All what is to be done is an accounting standard requirement. We should remember that both under AS as well as under Ind AS, apart from leases, we have got absolutely no relaxations because of COVID. Only because of the requirement of the IASB on leases, we have got certain relaxation on leases for the COVID requirement. Otherwise, no relaxation anywhere. We have to follow the standard. Companies may change their model and all those things. All that is fine. Fair valuation may be as per market prices and all those. That is all okay. But yet, those standards will definitely have to be followed without any of this thing here. One of the things which is very important from the point of view of this key audit matters is that I've just given 2 key audit matters of the last year from the same Fertilizers and Chemicals Travancore audit report. They have mentioned accounting for subsidy income from Government of India and purchase of raw material from a single vendor without a tender. I've just taken it from that previous year's audit report. Now, in the current year, the auditor has got 2 options. One is copy paste. No problem at all. It is anyhow a issue which is there. Or would you want to have a relook? Would you look at a relook and say that, okay, we should remember very clearly that impact of COVID is not going to be a key audit matter because key audit matter is talking about the risks of the risks in that particular audit. Impact of COVID will be on these individual areas, not necessarily only on this thing, unless you look at the going concern, for which I have a separate paragraph in the audit report. I would suggest that this will have to be relooked upon and not necessarily only copy paste from last year because of the fact that each year is representative or each year is having a different representation. It could be a key audit matter. It could be a risky audit area this year. The key audit matter is not a negative comment. It is not a negative comment. It is only a comment telling or bringing to the attention of the shareholder that according to the auditor, these were key audit matters which were risky in the audit. And he is also mentioning how he has rectified that key audit matter during the course of audit. I won't say rectified, but how he has addressed it. The word used is addressed it. Accounting for subsidy income from the Government of India has been mentioned as a key audit matter. The auditor is going to mention how he has checked this in the audit. How he has seen this. How has he given comfort in the fact, because we know Government of India means no confirmation of balance will come. Suddenly one day it will be credited to the account. We'll get one small letter. How does he check that? And this also, raw material from a single vendor without a tender, whether the same thing has been continuing or not, you please mention it separately here or repeat the thing here. The most popular key audit matters across the world, not only in India, and I'm talking about a selection of almost about 2,000 companies. Impairment, please remember, this is not qualification, only key audit matter. Risky area, impairment. Revenue recognition, both as per Ind AS 115 and also other Ind AS 11 and 18 in certain cases when it was there. Very surprisingly, many companies, auditors have mentioned that IT controls, information technology controls, is also a key audit matter because they are not able to understand, they have not been able to understand what are the implications of the IT controls or what sort of controls have been there which are impacting the audit. We all know that this maker checker rule tally, two people have to, one person has to authorize, one person has to approve. These are ideal principles which have been given in a manual which was, there for every company to follow. Has it been followed? That is what we have to see. Sometimes in complex accounting packages like SAP, we may have to get a further understanding of the package itself to understand what is happening there. So they mentioned this as popular and most popular key audit matters. I should also tell the people who are in this webinar that it is not mandatory to have a key audit matter. If the auditor is not having anything to comment, he does not consider it to be any risky area, he can always say that we have no key audit matters to report. It is not mandatory that one particular item should be put there. This is not a number game which has to be put there. It goes on the assessment of key audit matters. In case of COVID, what will happen is that any of these areas could be a key audit matter, not COVID by itself, right? Any of these areas could be a key audit matter, but not COVID by itself, because you all can probably give a key audit matter saying that impairment of COVID, impairment of financial assets, impairment of property, plant and equipment is a key area because the company has to evaluate on a regular basis and they've not been doing it. So please don't take key audit matters as a negative comment. It is only identifying areas of risk. As far as the repetition of the key audit matter is concerned, right? You saw about the subsidy thing there. Unless there has been an improvement, unless there's been a substantial improvement, the risk would remain. The risk would remain. If the company is continuing to give single tender basis to a vendor, the risk will remain. So removing of a key audit matter, would depend upon how that particular item has progressed in the current financial year. Have they improved these controls? In fact, what is very, very surprising is that these key audit matters should actually become the discussion for the audit committee to ensure that a rectification happens in the subsequent financial year. Some audit committees are doing it, but not everybody is doing it. So it should be an agenda item for the audit committee saying that, oh, the auditor has said this is a key audit matter. What do we do to address this in the subsequent financial year? IT controls. Can we strengthen it? Can we give him more information to the auditor? Can we also ask the auditor, what information does he want? So these could be a area for this thing here. As far as SAS 706 is concerned, emphasis of matter is slightly different from a key audit matter. Emphasis of matter, we are giving specific areas when we do not agree with the decisions or the calculations or judgments made by the management. They have mentioned in the case of fertilizers and chemicals, Travancore saying that revision of financial statements due to consolidation. Because of the requirement of the C&G audit, consolidation happened. Interest provision to the government of India. There was a variance between the interest which is provided in the books of account and as per what the government of India is asking. There's also been a non-compliance in Ind AS 116 on leases because it was felt that the Ind AS, there's no expiry date or there's no closing date for the lease agreement. So therefore, these three have been mentioned as emphasis of matter here. Again, the same questions are going to be asked now. It is very obvious that the first point, if a consolidation has happened in the current year, it will probably be removed. The variance in interest provision will probably have to continue because unless the company is rectifying it, non-compliance with Ind AS 1116 leases is a very clear emphasis of matter which will continue because as we have seen, Ind AS is mandatory. You cannot not choose to have Ind AS just because of expiry date. Maybe they should probably put in some expiry dates and sort of, just mention some expiry dates and then, do a calculation for that particular purpose. But these are emphasis of matter is a little bit more serious than, the key audit matters. So they would have to be looked upon and repeated, probably new matters added also. Maybe COVID can be an emphasis of matter. It is extremely possible that the impact of COVID can also be an EOM because impact could have been significant in many companies, right? So that also can be taken as a factor there. As far as SA 570 is concerned on going concern, as we know, this has to be tested every year. There is a specific para in SA 700, the audit report, format of audit report, which talks about going concern, and this SA has also been revised. Now, we all know from the requirement of the standard itself that the responsibility for checking going concern is with the management. We have no two doubts about that fact at all. They should tell us they plan to continue or not. That's one portion of it. The second portion of it, from the audit point of view, from the auditor's point of view, there can probably be a lot of data in his command, which sort of gives some sort of a indication, let me say, that going concern may have to be checked. Significant drop in revenues, severe cash flow problems. All these are definite tests of going concern. Now, all the auditor can probably do is just mention that the going concern has been prepared, assuming even though these factors are existing. See, normally what we see in the audit reports, and which is also a very practical way to look at it, is that nobody is saying that the company is not going to be a going concern unless the management says so. They have some plans for closing or they got an offer for closing or something. What the auditor will probably say is that he will say that the company has got significant losses. However, the management feels that it is a going concern still. I cannot push this under SA 706 or I can't push this under, 701 also on the key audit matters. It will have to come under the specific paragraph of going concern only as per SA 570 in the audit report. Now, in the case of fertilizers and chemicals Travancore, the auditor has mentioned this in the financial statements. He has mentioned that note number 54 is there. Losses of 1,213 crores are there. Net worth of is negative there. The company has got a balance and a current assets of something they have mentioned here. And the net current assets is there. And there is no uncertainty which may cast a doubt as the company's ability to continue as a going concern. And the company's financial statements have been prepared on a going concern basis. Our opinion is not modified in respect to this matter. So basically what the auditor has done here is that he has given facts and figures. He has mentioned figures saying that, okay, this is the total losses. The net worth is negative. Net profit is there in the current financial year. They have got some cash and cash equivalents also. They've got some significant cash balances. Net current assets is this much here. And he has given a sort of a confirmation that there is no uncertainty which may cast a doubt as to the company's ability to continue as a going concern. Now, one of the first things you are probably going to ask me is, why should he mention this? If the auditor is going to say he's given all these numbers and saying it's not a going concern, it's a going concern, then it is, we know it's a going concern. So why should he say this? So maybe I would probably think that there's been a going concern comment in the past. Therefore, for the purpose of giving further clarity, this has been mentioned here. But I would think that's the only reason why this is coming here. Because if you look at the numbers here, with the profit of, let us say, current year of 975 lakhs and the losses of 1,213 crores last year, 975 crores current year. Next year, the same trend continues. Maybe the profits of 2 years will have wiped off the entire carried forward losses. So there is no doubt that this is a going concern. Why should the auditor specifically state so? Because I would probably think that there's been a question raised in the past. He wanted to have further confirmation. But very interestingly, if you ask me what is going to happen in the subsequent financial year, I would probably feel that this note is not required because unless, of course, we have COVID impact and all those things. If the same trend continues, I do not see the necessity for a going concern mentioned in the subsequent audit report because of the fact that all the concerns, all the calculations and all the data go to prove the fact that it's not a going concern. So in summary, what we should probably look at is, if there is a doubt of going concern, you mention it. If there is no doubt, why do you want to mention it? Why do you want to give further, fuel to the fire by saying that it's possible that it may not be a going concern. So I think this is what is very important takeaway from the point of view of this particular auditing standard here. Okay, the last part on fact audit is that fertilizer and chemical standard audit is that with some difficulty, audit is done on 2nd of August. When will you complete the documentation? As per SA 230, you should complete the documentation by the 2nd of October 2021. 60 days is given to you. So this is more as a question to all of you all. I am not going to answer this question, but it will not be correct for me to answer this question. But the SA gives you 230 days. Sorry, SA gives you 60 days. As per SA 230, it is 2nd of October. But typically, as we have seen in the Indian context in many occasions, I don't think we can apply that concept here. That the concept is that if 30th of September is the last date for, let us say, a filing, we will file only on 30th of September. It's just a habit, not that we, it's just that we got used to it. Tax audit report, 30th September, last date, we will wait for the last date to file it. But I don't think we can take that luxury in documentation, because in my opinion, and this is purely my opinion, I'm not trying to, put any sort of influence of either documentation auditing standards or the ICAI on this. The earlier, the better for this documentation. I won't put a time frame here, but if you really force me and say, no, you have given this presentation, please fix a time frame, I will say not more than 1 month from date of completion of audit. 2 months is given by the SA 230. I would say not more than 1 month, because of a very simple fact. We have seen in practical cases also. Once we go in later on, we forget, we tend to lose that flow is gone. We tend to lose control. What document is required, what we don't have, what we have. Staff may have changed. Staff may have changed also. Therefore, it will be a very important factor. I would probably say that keep somebody there in the audit place, maybe for limited time. Try to complete the documentation within 1 month from the date of completion of audit. Don't, if it is earlier, all the more better. Nothing like having an earlier audit. So a couple of quick things on the importance of auditing standards before we conclude. The first thing we have to look at is that this is something called as the audit quality maturity model, which has been coming out by the ICAI. This has been rolled out already for comments, and it will probably come in very soon here. All the audit firms, all the medium-sized, most of the audit firms, right now it will be only for listed companies, but slowly we can expect this to come down to other entities also. They are going to be given a rating based on this audit quality maturity model, which means that there would be a sort of I told you about ISO 9000, something of that sort here, right? But doesn't matter what the rating is and all. What is important is that the AQM model continues with this requirement. It says that, do you have an audit manual that contains the firm's methodology to ensure compliance with auditing standards? The scoring is given based on the presence of a manual, right? Also, is there a specific availability of standard formats for letter of engagement, appreciation letters, significant working papers, and reports? Once this comes out to listed companies, it is mandatory any which ways for listed companies. They're going to anyhow have it for listed companies. It is very important that this manual, when I spoke about SQC1, I told you all about what is the most important word. Does the firm have got policies and procedures? Policy and procedure means that you should have a manual. Do you have a manual for all these things? If your answer is no, you will lose 2 points for this particular thing here. So this is a very significant development coming from the ICAI. That's why I'm suggesting that for all of you all, it is going to be only a matter of time, maybe a few years down the line. In a limited way, it will apply to what you and me are doing also. It will apply to what all of us are doing in a limited way, because it is very important that in the present times, a certain level of quality is maintained in audit, which is why we're talking about all these things and all these requirements of auditing standards and all these things required here. So in your AQM model, it will definitely going to be there. The other reason why it is important, I thought also, was that, though I'm not going to get into too much of a discussion about this, because this is basically coming in from the NAFRA website, and they have given these 4 audit reports on the audit of ILFS. Now, I am not going to pass a judgment on any of these audit reports, but because it was obviously done on a different pretext, and this was too big to fail. This was too big to ignore. Item like ILFS and a company like Nafra, they were exactly made for each other, because they were waiting for such an event to happen, so that Nafra was waiting for this event to happen, so they could catch this. I'll just mention a couple of things here. On a post-mortem basis, as it is, our audit is a post-mortem. On top of it, Nafra is doing a post-mortem of a post-mortem. So it is very easy to point out mistakes, which they have done. Obviously, Nafra has done. And maybe, of course, even from the audit firm's point of view, they did not expect this to turn to such a big situation. So maybe the documentation was not kept properly. They could have probably improved the documentation. All these things are definitely a part of the thing which we have to worry about. But what is of concern to us is the fact that you look at what Nafra is referring to. See, Nafra has got some chartered accounts in there on consulting basis also. They have started referring to paragraph numbers of SQC. They have started referring to specific auditing standards. So this is all the more important for us to understand that that's why this practical, when I said practical application of auditing standards, we wanted to ensure that an outside person like Nafra, see, whether Nafra should be there or not is a completely different discussion. We're not worry about that right now. That's not a point to be discussed right now. Fact is, Nafra is there today. They're looking at audit reports. They are looking at companies. Any listed company, we have to register with them. Already we have to, fill in those forms and register with them. Nafra has started talking about para numbers of auditing standards and quality standards. This would mean that if you are the auditor for a listed company or listed entity, irrespective of how big or large the company is, Nafra can come and ask you for documentation, ask you for following all the auditing standards. So this becomes a very, very important requirement here. So as I said, I'm not going to pass a judgment on what they have done in this particular case, but you can see that they have given specific references for various auditing standards. They have given 4 reports basically. I am also given to believe that they have also given the report on one more firm in Baroda right now. But I mean, the report is not in public domain, but I believe that inquiry has happened there. So I think that is why we have to worry about this thing. So finally, what I thought I should probably tell you before I conclude is that, what about the medium-sized firms? Medium-sized firms. See, as we have been discussing, and we have been telling this also, all these things look very good for a firm with a lot of staff, lot of resources, lot of partners, lot of people to do all these things. But for firms like ours, and I'm putting all of us in the same bracket here, none of us have got the luxury of having so many people to go around and, for example, SQC one talks about human resources. All those things let us not worry about right now. But for medium-sized firms, unfortunately, we don't have any escape from auditing standards. But what is the takeaway from this entire thing is that do as much as you can. That's all I'm trying to, and that's what I'm trying to say here, because as I have said, a couple of things which I will, during the course of this presentation, I've also mentioned those facts that the times, they've changed a lot. Times have changed a lot. There's a lot of change in the times now. Expectations have become more. We can't deny the fact. Expectations have become more. And not only from the clients, from the regulators, outside world, the public, everybody seems to be look upon auditors with much more expectation today than there were some time back. So we don't have an escape from auditing standards. However, you need not have to worry about the fact that, the auditing standards by themselves need not scare any of you all. Because if you look at any of the clients which you are talking about, and I'm talking about a very small and medium enterprise here, I'm going to go back to the individual audit standards quickly. If you look at these auditing standards, the first question you have to ask is, how many are applicable to you? Okay, audit quality is applicable to you, but even in audit quality, if you look at audit quality, what are you going to do in this particular case here? For ethical requirements, you're going to say, yes, you're not going to repeat the entire code of ethics of the ICAI, right? So to the extent it is possible, that's why I said that in these auditing standards, not everything may be applicable to all the clients you have to this thing. So in your audit checklist itself, auditing standards checklist itself, what are applicable, what is not applicable? That if you write, Then if you go forward with looking at how to follow it in practice, as I said, you will always have a scope for improvement. There's no two ways about it. There's no complete audit file, as I said, right? But you will probably have to look at it as much as we can, because one is from the point of view of the firm itself. You'll have to justify to yourself that the audit was done with all the auditing standards being followed. Second, and probably more important, is suppose a situation does arise wherein somebody, God willing, should not happen, but suppose they do ask you, how have you done the audit? Can we look at a few documents? What conclusions were reached? And how did the entire audit process flow from start to finish? What did you speak to the management? What responses you got from them? I think today that is not being captured. The purpose of this entire session was to ensure that, to give you all an idea that that is what has to be captured, right? With that, once again, I'll thank the Ernakulam branch for calling me and asking me to do this presentation. Thank you very much. And over to Gary Joseph. Thank you, sir. Thank you very much.
Thank you, sir. Any doubt, any questions from participants? They can post our Q&A box.
I think everybody wants to go and see the match, I think, though the match has not started.
Yes, I think there is no questions. Secretary also joined here from Mumbai. Our chairman has gone for some institute work. Some urgent work came and
No problem, sir. No problem.
yes, he told me to pass the message to you. Some urgent work at government office. So
Not an issue, sir. Not an issue.
So can we conclude, Diva, if there is?
Yeah, I think we'll conclude, sir.
Okay.
I would like to
thank
make
you.
a personal thank you to Mohan sir for that, for referring to FACT as his example. You know, I'm an FACT product. My father used to work for FACT. I did my education there. So it brought back actually a lot of nostalgic memories.
Okay,
Yeah, thank you so much, sir, for counting FACT.
Thank you, ma'am. Thank you so much.
Thank you, sir.
Yeah. So thank you, Mohan sir, for that wonderful presentation. Actually, it was a great, rich and vigorous presentation, I must say, because you didn't stop at any moment of time from you started your session. For the last 2.5 hours, if you say 2 hours, 40 minutes, you are talking, detailing about all the auditing standards which are applicable to us in a practical way. So you covered almost all the areas like documentation, audit file, audit sampling, related party transaction, going concern. It was a great presentation, sir. Great learning session for all of us here. Thank you very much on behalf of Ernakulam branch and all the participants here. I extend a sincere thanks to you for joining us on this program. Thank you very much, sir.
Thank you, sir.
And I also thank all the managing committee members who have joined for this program. Deepa, Varghese, Roy, sir, Srinivasan, Salim, Alan Joseph. Thank you very much. And thank you all the senior members and friends in our CFA community for joining on this program. Thank you for technical help from our staff, Raju and Tessie. There is few announcements for the upcoming programs. On 21st June, that is the next Monday, in the International Yoga celebration on the International Day of Yoga, we have a celebration at 11:30 a.m. in association with Income Tax Department and the Isha Foundation. So our program starts at 11:30 a.m. on 21st June. Then we have a 3 days program on MSME. Various aspects we are covering almost all the MSME issues and all the topics on MSME like central and state government industry subsidies and professional opportunities for CA. Then MSME Samadhan, MSME Data Bank, Udyogam registration, SME Exchange India listing on SME Exchange, lot of topics on MSME. It's for 3 days program. We are starting this on 25th June and ends on 27th June. And the program, the sessions will be from 3 p.m. to 6 p.m. on these 3 days, 9-hour CPE programs. So I urge all our participants to register for these programs, the forthcoming programs. Thank you once again, all of you. Have a pleasant weekend. Thank you very much.
Thank you, sir. Thank you very much.
Thank you, sir, once again. Thank you.